But the mind moves faster. This is not luck, this is discipline. Mind pillar. Take me higher tonight. Do it all, we're chasing the light. Crypto dreams and neon skies. We rise again, we never die.
Alright legends, welcome to another live stream. As per the disclaimer, love to start off with a disclaimer. Remember, I am not a financial advisor. I'm sharing with you how I trade and approach the markets. I encourage you to do your own research before you buy and invest in anything. And I'm doing this from an education and entertainment perspective only. Right, let me switch on the camera. What is cooking? This is going to be a little bit of a long live stream, legends. Okay, there's going to be breaks in between. There's going to be eating in between. There's going to be drinking in between. There's going to be hopefully trading in between. And remember to smash up that like button on your way in. Sometimes you forget, I know. What is happening here with the price of Bitcoin? Currently just going a little bit sideways, perhaps getting ready for the high impact news a little bit later this evening. Well, evening for me, okay? 8 o'clock, 8:30 Central European time for me. Okay, so I'm going to be here for a while. Hopefully I'll stay until the end. Maybe we can even, watch the FED conference together. We'll see how it goes. And maybe even catch a couple of scalp trades. Okay, well, I'm going to maybe attempt a couple of scalp trades here, some fun trades. And let's get the party on the road. Let me say hi to the community. Mr. Francois. Marathon, yes, that is what's going to happen. Mr. Alex, I made some tea and cookies, but I've already eaten them all. Hi, Devil247. Those are my favorite numbers. Yes. Nico, always appreciate the mods in the house. Let's go. Hi, Devil. Hello. Welcome to the live stream. Like tapped on the way in. Much appreciated. Hi, Devil. I think today deserves a marathon live. 12 hours, ew, that's pushing it a little bit. I have to get up early in the mornings, 4:30, 5 o'clock. That's when I get up in the mornings. So I need to get into bed at a reasonable time if I want to still walk around like a human the next day. Otherwise, I'm a zombie. I'll watch until the end, 100%. I can learn a lot from you, all the way from Hungary. Welcome to the live stream. Great to see you here. Okay, I love the track. Can you give me the name? Unfortunately not. It is music that my brother produces for me, so it's only available for me, and sometimes I do share it inside of the community. The goat, the teacher, Devil, great time. Greetings from Bulgaria. Legend D-Ball, welcome to the live stream. Good morning, legends. Elon Musk said money won't matter by, should we keep trading, make money, or trust him? Because well, you can stop making money if you want to. I'm just not sure how you're going to pay your bills, right? So, okay, 36 is still a very long time ago. It's still, it's still 10 years from now if that prediction had to come true. So you do you at the end of the day, right? I'm still going to make some cash because unfortunately we live in a world that is dominated by currency, okay, and run by currency. You want something in life, you want a service, you want a product, you want to eat, you want shelter, you need money. Unfortunately, that's how it works. That's the era we live in. That's the season in this timeline that we live in. So unfortunately for now, we still need money, okay? Good to see you, Devil. Great to see you here in the live stream. Hello, how are you? I'm great, thank you. It's been a while since I joined the stream. Hope everything is good and a nice FOMC. Yes, definitely. Thank you so much for joining. Hello, Devil. Welcome to the live stream. Mr. A Trader, great to see you here. Legends, hope you're all doing well. Need a trade, Devil. All the cookies are gone. Yesterday's short was stopped. In a new trade from Andy. Yes, Annie is busy inside of the community today. I did see he posted a little bit of a nice little trade. Let's see if it plays out. And I'll talk about, okay, why I am not taking that trade. I'll talk about why there's nothing bad, guys. I'm already in a short. Okay, let me just put it out there. Just now, I scare people out of their trades and they jump out of their trades. The reason I didn't take that trade is because I'm already in one. So I don't have to. Okay. And preserving capital for me is great. I'm already positioned. So if the worst is going to play out here that we need to analyze today, and I'm positioned. Okay. I am, however, not positioned in a long at the moment, but I will share my journal. Okay. My journal, okay, my dashboard. I've updated it a little bit just to make it sexy. I'll share that with you guys in a moment. Okay, hello Devil, watching you from the gym. Was wondering why you not at gym. I actually just came from gym. Okay, I went to gym. I had a nice little romantic bath and got dressed, brushed my hair, combed my teeth, and now I'm here in front of the live stream. So I already had my session today. Hello, Sir Devil. Looking forward to this one. Thank you for all you and Andy do. You guys are amazing. Absolute pleasure, man. Thanks for joining the live stream. Thanks for doing this. Appreciate it. Alien, King Kai, Mr. King Kai from Goku, Dragon Ball Z. Let's go. Hi, Legends, A Trader. Okay, and let's get the party on the road. We have 10 years left to earn all the money in the world. Exactly. Much love, Devil. Let's get that long. So maybe to start it off over here, I'm still in this short. I've taken a teeny weeny little bit of more profits as price fell here to the downside. I took a little bit more profits, but as you can see, okay, I'm not really looking for a short because I'm sharing with you how I trade, and based on how I am positioned at the moment, I'm not looking for a short. So I'm looking for a long. I missed this long. Okay, I missed this long. It's okay. I was waiting for a level a little bit further down, and I had my alarms set at the level further down. Okay, I did take the short last night from Andy on a different account, not on my Bluffin account, because I can't open up multiple positions until everything's closed. So once this position is closed, then I'll be able to take multiple positions on the same pair here on Bluffin, because it does cater for that, but all your positions has to be closed before you can enable that feature. It's like hedge mode. If you don't have hedge mode enabled and you have a position running, you can't enable it. Okay, most exchanges work like that. So I have to close my position so that I can enable multiple position mode. Anyways, that's besides the point. And here's my little dashboard. It's a work in progress, guys. I am trying to make it a little bit sexier, I suppose. I'm sure you guys remember it like this. I've even updated this a little bit more with drop-down menus in terms of what I am trading. Okay, what strategy I'm using, and I can select what strategy I'm trading. Is it a short, a long? My entry price, was it a win? Was it a loss? Whatever the case might be. Is the position closed? Is it still running? By the way, and I did get stopped out of that long that was still running here somewhere. Anyways. So, and that's the running total for the P&L that I've made so far this month. And then I pull it all nicely together in a dashboard that basically shows my total P&L from the 1st of July so far, my win rate, how many trades I've taken, okay, how many I've won, how many I've lost, my best trade and my worst trade so far. So this is a nice little dashboard. And then this little chart here shows me obviously my P&L, and then from the money that I've made, which was it, the longs or the shorts that made me the most money? And you can see, well, longs make me slightly more money than my shorts, but I have been longing and shorting almost equally, okay, like 60-40%, okay. I have been longing and shorting this little from the 1st of July. So I think this is a better representation of the trades that I've taken since the 1st of July. And then obviously when I take a new trade, I just go and add it here and it updates automatically. So I've put the formulas in and right. So I am updating my sheet as I go, making it a little bit more sexy and easier to use. So far, I've only taken 2 losses for this month. I must say, guys, for this month, it's actually phenomenal. Usually, I take a lot more losses. The amounts are usually not big for the losses that I take. My losses are generally a lot smaller than my wins, but usually I have a little bit more losses. Okay, so this month of July to date has been really good to me. Okay, and right. And those are basically the trades that I've shared inside of our community, that I've spoken about inside of live streams. I also have all my positions and all the trades here that I keep record of the ones that I'm still in, the ones that I'm taking. Oh, and I need to update. I need to do some updates here. Okay, because there was a short. It's this one. Okay, I need to add that to my positions. Let's drag this up. Okay, because I also took this little short yesterday in the community, and I saw Andy spoke about this short as well. Okay, this little short, let me just take those settings off. Okay, that little short I took last night. The plan for this short, and I will share with you guys what I did yesterday in the last night in the community while Andy was live. That was basically my plan. My plan was that, guys, like literally that was my trading plan. I just wanted to nice little profits to the downside, and then obviously it fell further to the downside, and shared with the legends. I'm taking profits, position is protected, SL is covered. Okay, and then this morning I woke up and I got stopped out with nice little profits. And it wasn't a big trade, but it was a decent sized trade. Okay, made $4,823 with that trade, which now brought my total to over 80k for the month of July so far. Could be a little bit less if I take or knock. It could be a little bit more, or maybe it stays the same depending on what happens today with the FOMC. Okay, and how I trade. Right, so basically, if you want to be part of the community, because most of these trades, if not all of them, were shared inside of the community or here on YouTube. Okay, some of them were caught here on YouTube while I was live, but guys, I can't be live all the time. When I'm not live, I'm inside of the community providing updates and sharing how I personally trade and approach the markets. If you want to be part of the community, remember the link is always down in the description. Send me the word access to my Telegram, and I'll send you the instructions on how you can join the community if you don't want to miss out on any of the action while I'm not on YouTube. Like, for example, Andy's not doing a live stream today. He's spending his time inside of the community, where I saw he is entering a trade. He's entering it. He's sharing what he's doing. Guy, you don't have to do anything and me and Andy are doing. We're just sharing how we trade. If it aligns with your analysis, great. Okay, if it doesn't align with your analysis, follow your own plan. That's what I like to say. Okay, and then obviously for the free tools, CVD, economic calendar, link down in the description. Okay, I actually need to change this free. I need to change the free. Yes, some of the features are for free. When you select this link, some of the features are for free, but if you want to use all the features, you have to go through the process. It will pop up. You will go through the process. Okay. And I will talk a little bit more about the free tools in a moment, because I did promise the community last night. There was a lot of questions around the free tools that I will get some clarity from the team last night, which I did, and I will share that today. Okay. Right. So this was basically the last trade I took last night, and I have not taken any trades today. Okay. Andy shared a nice little trade that he jumped into. Okay, and let's see how that plays out. First, what I want to do is just focus on this little structure that is formed here on the 1 hour time frame. So let's start with a little bit of technical analysis. Remember to smash up that like button if you do enjoy what I do here on YouTube from an education perspective. Let's get the party on the road. Okay, FOMC. Big high impact news today, as you can see here on the calendar. Can you guys see that? Right, Fed interest rate decision at 8 o'clock Central European time, which is my time. I did, this settings is set to my time. It might be different depending on where you are from around the world. And then 8:30 is the Fed press conference. Okay, and I'll see, maybe we can watch this together. I'll bring it up on YouTube and we can watch it together. Okay, and see how that impacts the price of Bitcoin. Maybe maybe between now and then, okay, I can get into a trade. Okay, on using a different account, because if it's a long, yes, I can go here on Bluffin. If it's a short, I'm gonna have to use a different account. I do trade with these accounts. Okay, guys, I trade with all of these accounts. The only one that's not here is BTCC, which I also trade with. Okay, but if you go through if you send me the word access to my Telegram, all the available options will be there, and there are also better deals inside of my Telegram, the automation bot that helps to get people through the process. Okay, Bluffin, as you know, 25% discount for new people on trading fees. Absolutely amazing. Okay. And you can go and see which other deals is available, and that will be shared inside when you send me the word access to my Telegram. Right, now let's analyze the price, and I will go through comments as I progress. I'm going to take it slow and easy. It's going to be a long day. Okay, so please relax. I'm going to get through everything. Maybe we can even look through some other altcoins like Ethereum, for example, if there is time and there's a demand for it. But first, I trade, as you can see, I trade a Bitcoin. And I have no reason to trade anything else because I make money on Bitcoin. And whether this is ETH, whether this is Bitcoin, whether it's XRP, whether it's Solana, okay, I'm going to most probably make the same amount of money. Okay. If not less. I think if I have to jump to trading something else, I must probably make less money because I've built like a little relationship with Bitcoin. I know how it moves. I know how to manage my risk from a percentage move perspective, and I might stuff it up if I just jump into an altcoin. But I don't. The point that I'm trying to make is I'm sharing with you how I trade and how I approach the markets. As a day trader, I only have to trade one thing, maybe two things. That's it. I don't have to trade 50 altcoins. I don't have to. Okay, because then I'm exposing my cash to so much risk. Okay, and then you have to manage them. You have to analyze all of them. I don't want to make so much work for myself. I spend a good amount of my day just analyzing one asset. I can just imagine if I have to do this for 10 assets and I'm trading all 10 assets. It's a lot of work, guys. I don't have to because I'm making money with Bitcoin and I'm happy with the profits that I've made for the month of July so far. Okay. Right. Let's get into the meat and potatoes. I'm going to go through a couple of scenarios. We're going to see if it's still valid. Okay. First scenario is one that I discussed during my previous live stream. I just want to see if this scenario is still valid. Yeah, that is not directional. The larger structure is still valid, but the internal count is not valid. So basically what I did here is to say that, well, if this is the A and this is a W, X, Y, but then the Y needed to be a C wave. And this, for the moment, is a three-wave structure. It's not allowed to be a C wave. It's not a C wave yet. Okay, let me rephrase. It's not a C wave yet. It can still form a C wave. Meaning what could happen here is 1, 2, 1, 2, 3, 4, 5, 4, 5. And that's going to be absolutely brutal because that means that this can do that. Okay, that's going to be absolutely brutal. And that is basically the bearish case scenario. Okay, this little local structure, and it never ceases to amaze me. Just want to make sure that the music's not too loud. It never ceases to amaze me how perfectly the market sets itself up for an explosive move to either the upside or to the downside, because where price is at the moment, it's 50-50, and I'm going to explain that. And when I say 50-50, it's either going to do that or it's going to do that. And it is perfectly positioned, even based on this little structure and this little structure that is formed to the downside, to do either. So it's not an easy one. It's not like a 70-30% chance it's going to do one of the other ones. Okay, it literally has set itself up perfectly, because when I look at this structure, okay, based on the current price action that we have right now, it's a three-wave structure. Which means based on the current price action, okay, the probabilities are higher to claim the high. Okay, that's the 50% to the upside. The 50% to the downside is price has positioned itself in a double 1-2. 1-2, 1-2 invalidation for this scenario is taking the high, and you can see why price is where it is at the moment. Okay, because most bearish case scenario is 1, 2, 1, 2, 3, 4, 5, 4, 5. It basically repeats the structure to the downside, and you have the guard candle in the middle with a massive selling volume pressure, okay, kicking in. So you can see how well the market has positioned itself. Is that the high and price is going to fall? Okay, or is this a three-wave corrective structure and it's going to continue to the upside? If price before the FOMC shoots up and takes the high, I'm going to say there's a higher chance to move up and to continue the momentum to the upside. Okay, or at a bare minimum, worst case scenario, continue the range. But at some point, take out the high. So I'm not saying once the high is taken, it's just going to go up straight from there. It can do that, definitely. Okay, best case scenario is it takes the high, it continues up. Okay. Worst case scenario is price forms a larger structure and then pops to the upside and it forms a triangle. Basically an A, B, C, D, E, and it continues back to the upside. Okay, I know I'm doing a lot of freestyle here at the moment, but I'm trying to explain to you what I see inside of this local structure, because regardless of how you count this entire structure, the most important structure for me from a trading perspective is this one. Because for the bears, you do not want this high to be claimed. So it's simple. Bears, if you're bearish and you believe the price is going to fall down based on your analysis, that high should not be claimed. So this is where you short and price could fall here to the downside. Okay. For the bulls, you want that high to be claimed. It either continues straight to the upside or it builds a larger structure, then it continues to the upside. But the probabilities will increase for the bulls once that high gets claimed, that the range basically continues. Okay, at worst case scenario. Hope that makes sense. Right, I think we get fake out today and maybe a pump next week or on Friday. Yes, that would also then coincide with just forming a larger range, guys. Because, you know, I think because today is a high impact news, and perhaps a lot of people are expecting a big move, and maybe the surprise would be that price just continues sideways. So yes, there's a little bit of a big move, then big move down. Okay, I can trade this, I can trade that, I can trade that, you know, and then the big move comes. Okay, price can still literally go sideways. Okay, if the big move does not happen today. All right. Okay, so let's go through. I know I have gone through this scenario in my previous live stream as well. Okay. I want to go through the purple one first. I want to leave that. I'll switch this off. I said, sorry, I do apologize, guys. I did say in the previous video when I discussed the scenario, I maybe should have done them separately. Okay, but it is what it is. Okay, I will do the next one separately. And I want to switch off the ABC. Not that one, that one. Okay, so let's focus on this scenario. Right, in this scenario, price has formed an A, B, C in a W. I wanted to see a larger three-wave structure, and now there is a three-wave structure. Because I think price was here, somewhere here when I discussed this scenario, and I said I would like to see a larger three-wave structure in this scenario. Okay. But I also highlighted the 0.382, basically taking a time Fibonacci from the low to the high of the structure. And I said ideally the three-wave structure finishes after the 0.382. Time is never an invalidation. Okay, but that low was made before the 0.382, so it does slightly impact probabilities, but I would say it's still okay. Okay, let me take that out the way. That low you can see was made before the 0.382. From a timing perspective, that's usually the minimum target. Okay, it was made slightly before, but I have seen this happen in the past. Okay, let me show you an example. Do you remember this? Okay. A, B, C. Do you remember this structure? A, B, C. There was the problem. Okay, because also when I take a time fib from the low to the high of the structure, look at where that low was made. Just before the 0.382. So it does happen. Okay, I have seen this happen before. So I'm okay with where the low is made. I'm happy that that there is a three-wave structure. That's most importantly what I wanted to see. There is now a three-wave structure. Okay, three-wave structure has now formed. So I could potentially take this, move it up and say, well, maybe that is the X. That finished just before the 0.382. Okay, and it did claim, the X wave did claim a minimum target from a retracement perspective, so great. So most bullish case scenario is that this structure needs to form an impulsive structure. You want to see an A, B, C to the upside for price to go and claim the high. So there is a chance that this low is in this scenario. Okay, and that is why yesterday I was waiting for that long. For me, that was a high probability trade. I was waiting for the long and my level got front run. It happens, guys. I don't mind missing a trade. I did jump into the short last night inside of the community and I still made money, so I'm happy. Okay, but I wanted a little bit of a swing here to the upside because depending on what happens, okay, then I'm positioned. Anyways, it's happened now and I missed the short and there's nothing I can do and I'm not going to cry about it. Okay, I'm still happy with the profits that I've made for this month so far. So in the scenario, Y wave needs to form an ABC to the upside, a three-wave structure to the upside. Okay, A, B, C and a W, three-wave corrective structure in a X, and ABC to the upside for Y, and ideally Y claims the high of W. Okay, I don't know how this structure is going to form. I don't know how aggressive it's going to get. I don't know how long it's going to take. Okay, because it could do a little ABC and then it's done. And then it falls back to the downside. And a very interesting zone where I'm looking for the shorts, which I'll discuss now. Okay, I will still be looking for shorts once price takes this high. Because obviously based on my trading approach, okay, if I get stopped out of this short, I'm going to be looking for a new short. I was looking for that long yesterday. I missed it. But I knew it was the right place or the right time to look for a long. Three-wave structure down. Okay, A, B, C, W, X, Y, however you want to count it. I'm going to zoom into the structure now on TradingView and I'll share with you what structure could be forming over there, the probabilities. Okay, and right. So if I get stopped out of the short, there's some interesting levels here to the upside where I'm looking for a short again. Okay, and if that happens live today, well then, okay, I'm going to enter that short live here on the live stream, just like I did this short, because the last time I did this marathon stream last week, that's where I got the short. Okay, I'd entered the short live on inside of this live stream last week, Thursday or Tuesday, I can't remember. Okay, it was Thursday or Tuesday. Maybe I should. Doesn't want to show me the time. Okay, anyways, and right, but obviously when I'm not on YouTube, I update the community. So if it's not going to happen today and I take the trade, it's going to be updated in the community. I took the trade. Just like last night, I told the community I'm taking this trade. Okay. Right. If you want to be part of the community, link is, send me the word access. There's my Telegram to be part of the community. Okay. And I'll send you the instructions on how you can join the community. I just want to see what CVD is doing over here. Okay. Someone also asked me yesterday just to go through some of the tools that's in here. If we have time, I'll go through that as well. Look at how beautifully the Berry CVD played out here at the tops. Okay, price took the high, Berry CVD, price continues to the downside. It wants to form a little bit of bullish CVD. But I think there is still a little bit more selling pressure. I think it might go down a little bit lower before it starts moving up. We'll see how that plays out, but CVD for me is the only indicator that I use. Love CVD. Okay, if you want access to these tools, it's yeah, the link is here, tools. There's the link, and you can follow the instructions on how to join. Okay, you will get access, free access to certain parts of the tools, but if you want full access, you're gonna have to go through the process, and I will explain that in a second. Okay. I just wanted to also check CVD here on the higher time frame. See what is cooking. People have been shorting like crazy. So what CVD is showing me is that as price is grinding here to the upside, there are way more retail interested in shorts. This is what I'm seeing on CVD. Okay, way more, because you can see price is making higher highs, okay, higher highs, and CVD is falling down, which means that the retail is shorting the market and the market makers are absorbing the short. They want to reverse the price. That's what it's showing me here at the moment. Local CVD always takes priority, and this is why I spend most of my time here on the 5-minute time frame. Okay, you can see how beautifully these CVDs has played out. Okay, and maybe a little bit later, because we do have a lot of time, I will do a mini crash course on how I read CVD. It's the only indicator that I use, and the reason this is the only indicator that I use is because it's real time. In real time, it shows me what retail is doing and what market makers are doing. Most indicators on TradingView are lagging indicators. Price has to form for the indicator to do something, like RSI and stochastic RSI and moving averages. Most 99% of indicators are lagging indicators. CVD, cumulative volume delta, not CBD, guys, because I know some people, mishear what it's cumulative volume delta. Okay. The reason I use it is because when I introduced it to my trading strategy, it improved my win rate. And it's another layer of confluence that I can add on top of when I'm looking for a long or a short. Okay. And these little lines, the development team have added for us because there's people that struggle to still read it, and it shows you the bullish and the bearish CVD. Bullish CVD between those two. So this is just to give you an example. There was, let me see if I can use the drawing tool over here. Okay. Between that pivot and that pivot, there was bullish CVD forming. Okay. Meaning retail was shorting. And the market makers were like, no, took the high. So it played out. It shows a tick. It played out. If it doesn't play out, it will have a cross. Because no indicator is perfect, but CVD is around 74% accurate, 75%. Okay, it does actually show you here. I'm not sure if you guys can see this. It's 70, this one at the moment, and it updates in real time. Based on how price action plays out and the CVD plays out, it will show you at the moment, based on current price action from the information that I have on the screen, it is 73% accurate. And that is phenomenal for any indicator to be above 70. Okay, it's phenomenal. Right, obviously, as I bring more price action into the screen, it will update. Okay, it will then use all the information that I'm looking at and will say, okay, now it's 75% accurate because it's including more data. Right, so this is what I like to see so it back tests the CVD in real time with the information on your screen. This is such a powerful indicator, and it's the only indicator that I use as part of my trading strategies. If you want it, there it is. Okay. It used to be for free because we were still building it. We were still testing it out. It was full of bugs. Okay, we were still enhancing it, but I think it's now reached a maturity point where you sort of still get it for free, but let me explain how it works. Okay, when you select that link to sign up, you're going to have to sign in, use your Google account or Gmail account, whatever the case might be, you can sign in. Okay. You have to sign up with one of my affiliates. If you're already signed up, great. And there needs to be at least $500 in your account. And you can unlock, and it will unlock the full tool for you. That's basically the minimum requirement at the moment. So the reason I say it's for free but not free is because you are in essence not paying anything extra. You're just trading like you usually do. Okay. the fee that you pay to open up a trade. So let's say you pay $1 to open up a trade, like you usually do. Whether you're trading on my affiliate or not, you're still going to pay that fee, $1. It might be a little bit less because I have the best discounts on these exchanges using these links. Okay, a portion of that $1 comes to myself and Andy. Not the whole $1, a portion of it. That then pays for the development team, the project managers, everyone that's building the team, future enhancements, because there's some exciting stuff that we're still building and it will be added as we go along. Especially the enhancement here on CVD that the development team is still working at the moment. So you can see that although we are receiving money from the fees that you would have paid anyways, you are actually not paying anything out of your pocket, okay, additional to use this tool. So I just wanted to make that crystal clear. So I can't say it's for free because in essence, a portion of your trading fees does come towards developing this tool, okay, but you are not paying a monthly subscription for this. You are trading like you usually do. And if you pay $1 to open up a trade, a percentage of that fee comes to us to develop this tool. Okay, so it's not a lot, guys. It's not a lot, but at least it supports us and it gives us the resources that we need to expand this going forward. Right, hope that is crystal clear. Because I do get a lot of questions sometimes from people asking me, Dewald, how does the affiliation work? Well, firstly, you get the best deals that these exchanges has to offer. Because if you Google it, if you Google these exchanges by yourself, you're not going to get the deals that we have. We get the best deals, okay, first of all. So you already benefit by signing up with these exchanges using my links massively compared to just Googling it and signing up by yourself. And then when you signed up and you want to trade like you usually do, okay, your minimum deposit is $500 and then it unlocks the tool for you. Also, you get access to the community. Okay, send me the word access and I'll send you the instructions on how to join the community. Right. Let's carry on with the technical analysis. And maybe before I go on to the next scenario, I'm going to pace myself. I'm going to go through some comments, okay? Because I'm hungry just to go through everything and then I discuss everything that I need to discuss in an hour and then I sit with a mouthful of teeth and I don't know what to say next, right? Okay, I'm going to be here for a while, guys. I'm going to be here for CBD, lol, yes. I do see, the reason I say CBD, lol, okay, is it's great because people hear CBD when I just use the abbreviation, but it's cumulative volume delta, so yeah. The only indicator not tied to price. Bullish THC. More high people trading. Oh, well, okay. I've never tried that before. Okay, Dewald, what about the moon indicator? Yes, moon indicator, remember, is also lagging. And it's better to use on the higher time frames. Okay, the moon indicator is also great, and I do have it here. Let me just, I don't want to switch out the scenario now, but the full moon, the full moon has printed. Okay, the full moon has printed. But I mean, before I get to that, let me just wrap up the comments over here. Okay, I'll discuss RAM. I will discuss that in a second. Okay, Mr. King Guy, do you gym legend? I'm sure Mr. King Guy gyms. Yes, I do. Slowly creeping down since last local top. Full moon is coming, Dewald. Oh, it looks like it's, yeah, it really looks like it's here already. Okay, it just, well, it printed. I don't know if it just printed, but it printed. Okay, and for those of you that know the moon indicator, this is a bullish sign. Okay, and I'll spend a little bit of time and just show you what this moon indicator does. Send the word access, correct. Yes, I do. Legends in A Trader, that's super. Okay, full moon. Can we use the platform for spot 2 only? We can use that platform for spot 2 only. I'm not sure what your, okay, are you guys to be live until FOMC? Yes, that's the plan. Whether I'm going to make it until then, I don't know, but that's the plan, okay? I want to be live up until 9 o'clock, 10 o'clock Central European time. So I want to see the impact and watch the Fed press conference together. Hi, Devil. I love the content. Very educational. Absolute pleasure, man. Thank you so much. Appreciate the kind words. And it's comment like these guys, you know, that makes it worth it for me and Andy to come onto YouTube, sacrifice our time, because it is a sacrifice of our time, and sharing knowledge. Okay, but I do think, I'm not sure about the people that you follow on YouTube, but from most of the people that I have seen on YouTube, I think myself and Andy are very unique, and Koen. I'm not sure if you guys know about Koen. Myself, Andy, Koen are very unique in terms of our approach towards YouTube, in terms of sharing education, sharing how to catch the fish, sharing how we manage our risk. Okay, because there's a lot of signal content out there, and I never wanted to start a YouTube channel to provide signals. There's so many, guys. If you want a signals channel, go somewhere else. If you want to learn how to do this properly by yourself, like me, staying consistently profitable as a day trader, then you're at the right place. Because I'm not just going to give you a signal and you sit scratching your head and you go, well, why is he taking a trade there? Okay. For me, the purpose of this channel is to explain to you why. I focus on the why. So that when I'm not here, and Andy is not here, because we might not do this forever, guys. I don't know for how long we're going to do this. Okay. I'm also getting old, I suppose. Fuck. Okay. You can see the salt and pepper here next to him. I'm also getting old. I don't want to do, I don't know for how long I'm going to do this, but the legacy I want to leave behind is that when I had the YouTube channel, one day when I look back, I want to say, when I had that YouTube channel, 10 people turned successful in trading. Even if it's one person, which I've already received a lot of testimonials for. It's at least more than, I would say it's more than 5, 10 people I know already. But I want to leave that legacy behind to say that you've learned to do it yourself. You don't have to follow signals channels anymore. Okay, you can go and laugh at the signals channels because you know that they are smoking their socks, right? You mentioned to join to your community, we need to use your referral in crypto platforms. Yes. You basically sign up with these links. Okay. If you send the word access to my Telegram, you'll also get you'll get the instructions on exactly how you need to join. Okay. And these links are inside of that process as well, or inside of this process. Right. Some people want to have the tools, they don't want to be in the community. Doesn't matter. Some people want to be in the community, they don't want access to the tools. Okay, but when you sign up, by the way, when you sign up with one of these exchanges, you get access to both. You can choose whether you want them both or not. It's up to you. You get access to the community and you get the free tools. That's the benefit. Okay, the one clarification, because I know the community asked me last night, Deerwold, there's the one way which we call the elite pass is you can get access to the community by signing up with one of these links, making a minimum deposit of $500, which is your money to trade with. You're not giving us the $500. It's your money. You trade with it, okay? As and how you please, right? You then get access to the community. And it unlocks the tool. If you have joined the community by paying a subscription, you will unfortunately not get full access to this tool, because this tool only uses the model that I've just explained. This tool, for the moment, because of where we are in the development cycle, can only be unlocked by using one of my affiliates and making the minimum deposit. So if you're paying a monthly subscription for the community, okay, the subscription model for this tool is not available yet. Okay, so I clarified that with the team yesterday. The only way you will be able to use this tool is by signing up with one of my links, making a minimum deposit, and you'll get full access to this tool. Okay. Right, so I think much love, Devold. Got to work now, but we'll come to you afterwards. I love your education, absolutely, Victoria. Thank you so much. Enjoy work, Devold. Shortly, you are doing awesome. Thank you so much. Okay, India, great special day. We're honored teachers and mentors. I just wanted to take a moment to thank you for teaching me trading and sharing your wisdom with me. Absolute pleasure. Thank you so much. Great to see comments like this. Really motivating. Okay. Devold, you skipped my question. Devold, are the tools free for people in the paid community if you are using the Elite Pass? Because remember, you can get into the community like I've just explained. You've signed up with one of our links, you've made a minimum deposit, you get access to the community. If you've done it that way, the tools will be unlocked. The tool will be unlocked. If you're paying a subscription inside, remember that subscription that you pay to be inside of the community is for the community. Okay? And the subscription model for the tools is not available yet. So the only way you're going to get access, unfortunately for now, based on where we are from a development cycle perspective, is by signing up with one of those links, one of my affiliate links. Okay. And sorry guys, I have a muggy flying around here. I don't know what you call it in English. And right, or you can send me the word access to join the community to my Telegram, and I'll send you the instructions on how you can join the community. Okay, so sorry, guys, also something that I want to highlight. If I skip your comments, okay, if I skip a comment, please don't get upset. I'm not skipping comments on purpose. Okay, maybe I need to say, when I read a comment that I don't want to pay attention to, maybe I just need to say, moving along, okay, but okay, so I don't skip comments on purpose. I read what I see, and if I skip it, I skip it. Okay, I'm not doing anything on purpose over here, right? The deposit bonus offer, do they have a limit on first number of signups? Well, you need to, so what you can do is you can send me the word access to my Telegram, and I'll send you the instructions. You can ask those questions in there. Okay. There is an automation AI bot that can answer most questions. And if the bot gets confused, I jump in. Okay, we have a team of people, support people in the background that's helping with all of this. I can't just, myself and Andy can't do this just by ourselves because I'm here on YouTube. I can't be answering Telegram questions and, you know, instructions and things like that. Right, oh, I missed that secret. Thank you, Devold. Okay, cool, guys. Let's get on to the next scenario. So, there's a chance. Basically, what I'm trying to say is it doesn't matter how you count the structure. There's a chance for this low to be in and price moves up. There's a chance. Okay. Very, very cheeky. Very, very cheeky where price bounced because I was waiting for that level. That's why I missed the long. And I'm not going to get harp on the fact that I missed the long. It doesn't matter. Okay. I will get in another way. Or I will just look for another short, or, you know, I think my track record is I'm happy with the track record so far for the month of July. I don't have to trade every opportunity. Okay. Money is money at the end of the day. I will discuss the moon phases in a moment. Just want to wrap up the scenarios over here. Then there is another scenario, which is this one. Just give me a moment so I can do this properly. There we go. And it's this one. Okay. And I can go through scenario after scenario after scenario. Okay. And I'm building up to a conclusion. This is an A instead of a W. If this is a B to the downside, it cannot be done. It's too shallow for a B. Because if this is an A in a three-wave structure, B has to tap at least the 0.9. So this structure can still morph into something larger. Okay, but remember, the only difference is, okay, that this structure that is forming here to the downside has to be a three-wave structure. A B is not allowed to be an impulsive structure, and that's going to be the clue. Okay, this structure has to be a three-wave structure. It's not allowed to be a 1, 2, 1, 2, 3, 4, 5, 4, 5. If that happens, then no more B, because that's an impulsive structure, is not allowed to do that. So in this scenario, this structure can still morph into a larger three-wave structure. So in the WXY, there's a chance for that low to be in, like I've just discussed. If price is going to fall further to the downside, let me just take that box out the way and add this box. Okay, that's where you want the B to bounce. And for the moment, this is the worst bearish case scenario I see at the moment. Just FYI, this is the most bearish case scenario that carries the highest probability that I see at the moment, which is still bullish, by the way. It's still bullish. Look at that. Okay, after this B makes its bounce, that's a beautiful trade to the upside from a risk to reward perspective. Obviously, I'm going to print money with the short that I'm currently in over here. Okay, so it'll be happy days with the short that I'm in, but when price gets here, I'm going to be very, very interested in a short, because I'm still not expecting a capitulation to the downside. I'm expecting price to bounce in this zone if things get really nasty to the downside. Okay, so this could be an A, B, C three-wave structure. For the moment, based on this structure, the probabilities are higher to claim the high. But this is where things get really complex. A three-wave structure can be part of a larger corrective structure. So this could now be a A. It goes up for a B. And then it falls down in a C. And then you have an A, B, C inside of your B, and it bounces back to the upside. So this structure, unfortunately, can still morph into something larger. This could be a W, X, Y. Okay, but I don't want to create confusion. It can, from a simplicity perspective, the structure can still form a larger three-wave structure. This can still do this. Three-wave structure in a B. Minimum target for the B, the minimum target, if B does not claim the 0.9, it's not a B, because A is a three-wave structure. A, B, C is a three-wave structure, which means that B has to tap a flat target, and the first flat target is the 0.9, $58,675. So you can see that if price gets here, I'm going to be very interested in longs, because I'll show you now on the higher time frame. I will spend some time on the daily time frame. Why? For me, a capitulation to the downside carries lower probability. I can't say it can't happen. I can just use probabilities. But there's a low probability, if price does take the low, that price for me is going to capitulate. It's most likely going to get a bounce, and it's going to do that. Okay. The interesting thing is, I'm not sure, because legends, there are so many rules inside of Elliott wave theory that I sometimes get confused. Okay. But an interesting scenario is that if price had to fall down and bounces at the 0.9 without taking out the low, it does not take out the low, but it bounces at the 0.9. Okay, the 0.9 is basically taking a fib from the low to the high, and when you switch on your 0.9 Fibonacci level, that's where it is. Okay, or you can take a trend-based fib like I did and switch on your 0.9, it's exactly the same level. But an interesting thing about Elliott wave theory, okay, without trying to make it too complex, is if price does bounce successfully in this zone and it starts moving up, price has to take the high. Doesn't have a choice. It has to. Okay. Let me use softer words. There's an extremely high probability that if price bounces at the 0.9, it's going to take out the high. If price takes the low, it doesn't have to take the high. It can fall back again, but I still expect a bounce. So just some interesting rules I wanted to point out. You get regular flats, you get expanding flats, you get normal flats, and it's just part of those Elliott wave rules. Okay, so for now, and I'll explain this on the daily time frame. This is the most bearish case scenario that I see at the moment, and this is why I think it's worth for me to discuss the scenario. That if things get really brutal here to the downside, so perhaps this is, here's my pen. Okay, three-wave structure in a W. Okay, let's just call it a W. It forms a three-wave structure in a X, and then all hell breaks loose and it ABCs here to the downside. Okay, it falls aggressively to the downside, and that is potentially something that could happen today. I don't know. Okay, with the FOMC, is that price maybe takes the highs or it doesn't. It rolls down, it starts falling here to the downside, and then this is the zone where I'm going to be paying attention. The beautiful thing about the zone is that I have levels that I can pay attention to, and I have an invalidation. Because if price taps the invalidation, it's not a B. Or there's a very low probability that it's a B. I have very, very, very rarely seen a B wave tap the 1.618. 9 out, or I would say, guys, like 95 out of 100 times it bounces in somewhere in the zone, and you can see it's a big zone. So the beauty about if price capitulates here to the downside is that I have levels, which makes me happy because I can play swing failure patterns from these levels. Okay, and basically, in a nutshell, the swing failure pattern is I want price to dip below and start trading back above. I know where to enter, I know where to put my stop loss, and that is a swing failure pattern. If it doesn't do it here, I'll watch the same thing at the next level, and the next level, and the next level. Okay, so the beauty for me about the scenario is that I have levels to pay attention to. And when I start switching on other areas of support, weekly levels, daily levels, then I can build confluence to see, well, which level looks like the bounce is most likely going to take place. Hope that makes sense. So let me do monthly, daily, weekly point of controls. Okay, a lot of levels here to the downside. This is, by the way, old monthly level. Beautiful SFP from the monthly level. Okay, whoever caught that long, absolute golden long there to the upside. Anyways, next level, I can actually delete that because it's no longer valid. Remove. Okay, next level here to the downside. Well, you can see at the 0.9, first B flat target is a daily level. So there's confluence in this zone. Beautiful. A little bit further down at the 1-to-1 extension, if price takes the low, there's another daily. Okay. And then yeah, between the 1.236 and the 1.382, which is usually your maximum target for a B wave, you can see there's a lot happening here. There's a naked point of control, there's a weekly level, another naked point of control. So definitely, if it wants to get very aggressive to the downside, there's a lot of support in that zone. There's not much happening here. If price loses this daily, okay, this is the way that I'm going to trade it. If price loses this daily, I'm not going to do anything here. I know there's still a naked point of control here, but I'm personally not going to do anything there until price gets there. So you can see that there's still a lot that needs to happen. I mean, this is the 4-hour time frame, guys. I mean, this can still take a week or two before the scenario plays out. Just the first leg here to the downside. But basically, that's how I build confluence. Okay, I will get to that in a moment. Interesting where price bounced inside of my support box. Interesting where price got the rejection inside of my resistance zone. We have support here, okay, to the downside as well. Inside of that orange box, there is support just above the 1.236. Okay, anyways, just wanted to highlight that. Right, so very interesting scenario that could potentially play out over here. I want to see if this one is still valid. Yeah, this one is still valid. Most bullish case scenario, price just moves up. But it's the same as the WXY. Okay, it's a different count, same directional bias. WXY. A, B, C in a Y. Okay, I just want to see, yeah. And this B wave, can you see, did not tap the 1.618. It bounced in the orange box. Exactly the same way that I've just explained the B flat. Okay, so this price could form a 1, 2, 3, 4, 5 to go and complete the Y wave. I just don't know how high this is going to go. I'm just trying to show you that this can form a three-wave structure to the upside, reject, fall down. Once price gets here, okay, basically taking the high, once price takes this high, it really becomes interesting for me to look for a swing short again. Okay, so yes, this scenario is still valid. This B wave, as you can see, did not claim the 1.618. Invalidation. If price falls down here, taps the 1.618, then I'm throwing the scenario in the bin. But this is definitely still a scenario that's intact. But now, I want to just say, guys, there is, and I've shared this last week Friday in the community and over the weekend as well when I spoke to the community. There's a lot of ways in which you can count this structure. A lot of ways. I think you can also add a wave 1 here. Okay, then you have an A, B, C, W. Okay, you can also count that as an X. And then this is an A, B, C in a Y. 1, 2, 3, 4, 5. Directional bias is the same, so it doesn't matter how you count the structure. There's a couple of scenarios in which you can count where this is the low. There's a couple of scenarios where you can say, okay, maybe that if this is a massive A, then there's maybe that B to the downside, and then it goes up. Okay, and that's why risk management is so important. Okay, but the directional bias is the same. Whether I count this as an A, B, C, whether I count this as a 1, 2, 3, 4, 5, whether I count, there's many ways, guys, whether I count this as a W, X, Y, directional bias is the same. I must say that there's a lot more scenarios pointing to the upside. And I'm not saying that is what's giving it higher probability, but there's a lot of scenarios pointing to up. And I know a lot of people are bearish at the moment, but there is a lot of scenarios pointing that this high can be claimed again with relatively high probability. Worst case scenario is that this forms a B wave, then takes the high, but I still see the high getting claimed. Okay. Right. Let me go through some more comments. Remember, guys, I am going to take a break after every hour, hour and a half, just to pace myself, make something to eat, get something to drink, stretch my legs. Still need to feed my dogs a little bit later. And because it's still going to be, I mean, it's only 3 o'clock here now, and I still need to stay here until, what, 9 o'clock, 10 o'clock tonight. So I need to pace myself, okay? And I still want to have a voice left by tomorrow. Price has to do nothing. It can do whatever it wants. Exactly. What is the point of counting? The point of counting, well, the point of counting for me is it adds another layer of confluence. Okay. So on the smaller time frames, that's where it gets interesting for me, because when for example, when I see a large structure that has so many scenarios, I trade the local structure. Because last night, what I shared in the community was a 5-wave move to the upside. I knew it could, there's a high chance it could take the high again. Okay, this was the trade that I highlighted last night in the community. So you're asking me what is the point of counting? Well, the point of counting for me is that I saw a 1 2 1 2 3 4 5 4 5. I was waiting for that short because I counted the structure from an Elliott wave perspective, and you will see that I traded on my trading journal. That was an Elliott wave trade. But I used, so sometimes it's not easy for me to say, well, what strategy did I use? Because I took the trade based on Elliott wave theory, but I used my swing failure pattern strategy to execute the trade. But my biggest reason for taking the trade was because of Elliott wave theory. So I can trade Elliott waves. Okay, most of my trades is SFP, but also then based on Elliott wave confluence. So because the larger structure can morph into so many things, and I'm a day trader, I'm just looking for a trading opportunity. I want to make money. That's all. That's all I want to make. I use Elliott wave theory as a layer of confluence. So last night, okay, guys, I didn't watch Andy's whole live stream. I was, doing some updates inside of the community as well. And then I saw Andy also spoke about this, this trade. But I want to explain how I got into this trade, okay? Because how on earth, because I know some people are going to say, but the community knows already. But for the people that are not inside of the community, by the way, if you want to be part of the community, you can just send me the word access to my Telegram and I'll send you the instructions on how you can get in. But I think the way that, because I watched Andy's live stream after the fact, okay, and that was the short, basically, that Andy highlighted. Andy wanted price to get back below, enter, stop loss. Take profits when price, starts eating up these lows. Great. Absolutely great. I mean, from a risk to reward perspective, that already for me, okay, is a proper risk to reward. Anyways. So you might be asking yourself, well, how on earth did you get in over there? Because I wanted to get in at the highest point possible, and I highlighted this level inside of the community. And I told the community I entered a short. Okay, because I'm sharing how I trade. You don't have to do the same thing. Okay, you can either wait for price to get acceptance back below, and then your trade looks like this. Bigger stop loss, but still a small enough stop loss. Okay. Usually, like Andy likes to preach as well, where, when price hits a 2 risk to reward, you take some off the table. Okay, that was already an amazing little trade. That one over there, the one that Andy took inside of his live stream. I took it a little bit different inside of the community. I nailed that entry on top. How did I get that entry on top? You might be asking yourself. Okay, I took because I know that this fifth wave can be measured. That fifth wave can be measured. So I took a trend-based fib extension from the high to the low, and I reversed it. And let's extend it here to the right, and I can show you. Okay. Can you guys see that? Okay, so these levels to the upside are fifth wave targets. Now, because I know that, I can now look for a better entry using a swing failure strategy, and price rejected from the 1.236. I saw the rejection, but you can still see I didn't end. It looks like a great entry, but now when you look at the level, you're like, I could have even done it better. Okay, look at that. I got in a little bit late. I didn't nail it at the level. Okay. I saw the rejection, price pulled back, and I entered, just like I did on the previous live stream when I caught the short there to the upside. Okay. This short was done the exact same way. That short live here inside of the live stream. So what I shared yesterday in the community is, guys, pay attention to these levels. And as price rejected here, I told everyone I took the short. And the reason risk management is so important is because I saw this as well. I was like, there's a chance that price could do this. And then it rejects. But I don't know if it's going to do that. The stop loss for me is so small because of swing failure strategies gives you really great stop losses that I was prepared to take this knock and have another attempt. And if I took another knock, I would have had another attempt if I kept on seeing the rejection. But I couldn't wait for that before I took the trade because I know it might not play out. So I saw the rejection, entered, so I had a better entry. And then obviously price fell here to the downside, kept the community up to date. I'm taking profits, protecting, covering my SL. Okay, and that turned out to be a nice little scalp trade here to the downside. And it was round about, I would say, it was round about, yeah, where I switched off my computer. Okay. So that was the trade of yesterday. So maybe just to and I know, guys, this is 1 minute time frame stuff. Okay, this is scalping. Okay, but this trade was taken using Elliott wave theory. So I might not know. This is the point that I'm trying to drive across. I might not know what is going to happen here because there are so many scenarios, but I do have scenarios that supports that this low could be the low and there could be a bounce. So it becomes an interesting longing zone. And let me explain. Using Elliott wave theory, this is what I highlighted yesterday to the community. Okay, I see a five wave structure to the downside. 1, 2, 3, 4, 5. And when I highlighted this scenario, I must actually show you guys, this didn't play out yet. I said, guys, I'm waiting for that. I'm waiting for that because I want a long year. I want to long. Well, and Murphy would have it, the level that I wanted to long was a little bit further down. Okay, I told everyone, because the community, I know there's a lot of community members inside of this live stream as well. This is where me wanted to long. I was waiting for this. 1, 2, 3, price was here, crawling, chopping. I wanted to long that. And then price swept the lows, and I said, well, that was also valid. And, you know, as price develops, I can update the community. If you got into the SFP from the lows, it's definitely valid because it could be a short little fifth wave to the downside. Done. Okay. And if you have a 5-wave structure to the downside, you at least expect a correction back up before it continues back to the downside. So I can trade and build confluence using Elliott wave theory in combination with my trading strategies. So what I'm trying to highlight, okay, and I hope I'm driving the point across because it's a very important question, because I also felt like that when I started studying Elliott wave theory and I saw how many scenarios, especially here on the 1 hour, 4 hour time frame. You know, you start counting, you get the hang of it, and you're like, well, is this a ABC, or is this a WXY, or is this going to form an ABC, or is this number 1 and then it's going to form a larger triangle and then break to the upside? Okay, it gets confusing because obviously the larger time frames takes way longer to play out. Sorry guys, there's this thing flying around over here. But based on all the scenarios, I know that there's a chance for a bounce over here because I can see a 3-wave structure. So the 3-wave structure could come to an end and it can claim that high. So now it becomes interesting to look for a long. I missed the long. So based on Elliott wave theory on the local structures, even if I don't know what the larger structure is going to give me, I can place high confluence trades. And I'm sure Andy will sing the same song since I've introduced Elliott wave theory to my trading strategies. Okay, because I trade SFPs, I trade my D-line strategy, I trade lower highs, higher lows, harmonic patterns, Elliott wave theory, and I need to include the range high and low. I just didn't write it correctly over here. So I have many trading strategies, and then when I learned Elliott wave theory, it was very very confusing in the beginning, and I even thought to myself, why did I even go down this rabbit hole? Okay, but then you start seeing the light at the end of the tunnel, and then when I combine my Elliott wave theory with my trading strategies, it becomes incredibly powerful. Okay, I hope that explains why even count. Well, this is why I count. Because I knew, based on all the counts that I've done inside of this structure, that there's a chance for a bounce. I was waiting for the bounce a little bit lower down, so I missed it. Could have gone in at the SFP, which I did highlight inside of the community. I did see that there was community members that did take that long. Great, because we tell people how to trade. Well, no, not. I don't want to use the wrong words. Because we educate how we trade, people were able to take this trade successfully, even though I missed it. Sometimes I miss a trade, sometimes Andy misses the trade, but the community still takes it because of all the education. So I knew that there was a high probability for this bounce over here. Also based on the local count. Also based on all the scenarios that can take the high again. So that's what makes the longing and shorting opportunity so interesting. I knew that there was a rejection zone over there based on Elliott wave theory, based on resistance. Okay, so I know that I'm harping on this point, but I hope it makes sense, because it's a very important question. I'm not trying to break you down or criticize you. It's a very important question because I asked myself that question when I studied Elliott wave theory. Why even count? Well, I've taken many successful trades because I know Elliott wave theory in combination with my trading strategies. And I'm not saying that you need to know Elliott wave theory before a person can become a successful trader. I was a successful trader before I knew Elliott wave theory, but Elliott wave theory has put it a little bit on steroids. It's made it better. My win rates are better. I'm holding longer onto trades. Okay, I'm leaving runners because I know that there's a bearish case and where it could go to. For example, if price had to come down to this daily level, because I know, let me try and explain it a different way. If you do not know Elliott wave theory and price starts falling to the downside aggressively, okay, most people, retail people that do not know Elliott wave theory are going to expect that. Oh, it's going to take the low. We're going to $40,000. Now, because I know Elliott wave theory, and if I can count a three-wave structure here, maybe it does this, okay, ABC, ABC, it forms a three-wave structure. I know, regardless of what the world is shouting and how bearish they are, I can look for a long because I know that this can form an A, B, C and surprise everyone. And by the time people have woken up and why did the low not get claimed, I'm already in profits here on the way up. I hope that makes sense. So if price gets to an area of interest, I have a count to support a bounce in that zone, and I'll make a trading decision, because if I didn't have, let's say I couldn't count a wave here. I just couldn't count the A wave. It didn't make sense. For some reason, I can't count the A wave to the upside. I will not even consider a B flat. Which means that maybe I'll scalp that line, get in, get out, take my profits if there's a small little reactionary bounce. Okay, so I think I've harped on that point quite enough. Let me go through some more comments. And then I'm going to take a 5-minute break. Who is full of shit? Stankonkogober, am I full of shit, or are you telling someone else that they are full of shit? I'm not sure. Okay. Shorts too crowded, probably a squeeze up before the drop. Most bullish scenario, you say, meaning BTC has to go lower. We will see. Most bullish scenario, you say? Most bullish case scenario is that price forms a double 1-2 here and continues up. Okay, most bullish case scenario 1-2, 1-2, 3, 4, 5, 4, 5. Price moves up. Invalidation is taking that low. I'll explain. I will analyze the smaller time frames in a moment. Okay, there is a clear, there is a bullish case scenario over here. Bearish case scenario is ABC, like that. I need to go into the smaller time frames. There was a beautiful ABC there. 3-wave up, 3-wave up. Okay, and price takes the low. By the way, Andy did highlight an interesting trade inside of the community just before I started the live stream, because there's a chance for a little drop here. Okay, most bearish case scenario is 1-2, 1-2, 3, 4, 5, 4, 5. Most bearish case scenario. I'm already positioned in the short. I got stopped out of my long over here. Got stopped out of my long. So I'm now looking for a new long because I'm already positioned in the short. Okay, I'm already positioned in a short. So I'm not too interested to look for a short unless I'm scalping, and I can do that on a different exchange like 2bit, for example. 2bit is great. Fees are amazing. You also get a sign-up bonus. So 2bit is great. If I do take another short, for example, I will take that on my 2bit account. Link is down in the description. Okay, I want to see what CVD is doing. Still some local bearish CVD. Like I said, guys, I think price was here somewhere, and that bullish CVD formed, and I said I think it's still going to continue and chop the lows. And so yeah, you can see it's still continuing here to the downside. I think the market is waiting. The market is waiting for the FO, because I can also count this as a 1, 2, 3, 4, 5 wave structure here to the upside. Invalidation is taking this low. As long as price does not take this low at, let's say, 63,500 zone, as long as price does not take this low, the structure is still bullish. And if you're asking me why, okay, I can explain it very simply. Very simply. The local, I'm talking from this low, this structure is forming higher highs and higher lows. So this structure locally is still bullish until this low is taken. It's as simple as that. The structure is bullish, forming higher highs and higher lows. From an Elliott wave perspective, I know that the most bullish case scenario is a 1, 2, 1, 2, and it rock and rolls in a 3, 4, 5, 4, 5 to the upside. So you can see, you don't have to know Elliott wave theory to know that that structure is bullish. As soon as price takes the low, well, okay, it might bounce, higher, lower high, and continue to the downside. Right. On a larger scale, that high needs to be claimed. Okay. That high needs to be claimed. You're waiting for the 3-wave structure. That's where the opportunity lies, but I have to see the 5-wave structure first. I need the high to be claimed, and then that becomes a longing opportunity. So I don't need Elliott wave theory to know that price needs to start changing market structure. Okay, you have a high, you have a lower high, you have a lower low, and you have a lower low. So when do I switch bullish? Technically, from a structural perspective, price needs to create a higher high. That is not where I long. No, that's not where I long. I wait for the pullback. That's where I long. Higher low continuation. That's just based on normal market structure. Right, legends, I am going to do this here quick. Back in 5 minutes. I'm just going to take a quick little break. I'll leave you with some music. And right, I will be back in 5 minutes and then we'll continue. I'm still going to be here for a long time. So go make yourself some coffee, grab some tea, biscuits. I mean, Alex, I know your biscuits are finished, so this is an opportunity for you to go grab some biscuits. I will see you back here in around about 5 minutes.
From a silent screen, heart beat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I haven't met. I've been down where the doubt is loud. I've been lost in the digital crowd, but the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantees, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway. Late night glow from a silent screen. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I have. I've been down with it loud. I've been lost in a digital crowd, but the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantee, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway.
All right, let's go. Okay, I am back. Tonight is going to get exciting with the Fed interest rate decision. Going to see how that plays out, how it impacts the probabilities and the price. I do think price is going to chop around here in this zone for a little bit longer. And I want to spend a little bit of time here on this local structure. So I think, this structure can be counted as a W, X, and a bigger Y. Now, this is another scenario that I'm considering, okay? But before I get to this one, okay, let's just start off without creating confusion. Okay, A, B, C. Move B over there. So there's a chance for the low to be in. If this low is going to hold, what is this? Can this be counted as an impulsive structure? Okay, remember, there are 3 impulsive structures. Can I with high probability count one of the following? Can I count an impulse? 1, 2, 3, 4, 5. That's the simple impulse, plays out very often. 4, not allowed to go into the territory of 1. This usually is a 1.618 extension, okay, 161% of wave 1, and then you form a 3 and a last 5 to the upside. Can I count this? Or can I count nested 1, 2? So I'm just going to draw this one. 1, 2, 1, 2, 3, 4, 5, 4, 5. Okay, and it can build many more. It can go 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4. That's the basically nested 1, 2s. Basically, structure stays, as long as market structure stays intact, higher highs, higher lows. Okay, that is a possibility with a guard candle in the middle. Or can I count a diagonal? 1, 2, 3, 4, 5. Where 4 overlaps with 1, and it forms a contracting leading diagonal. So I'm looking for one of these 3. Either this one, or this one. Yeah. Okay. So that's now what I'm going to try and figure out. Let me just take all this scribble out the way. And if I cannot count any of these 3 structures with high probability, then it's most likely a corrective structure to the upside, which means that the lows can be taken again. And this is why I was considering maybe even a scenario like this. Okay, maybe this is A, B, and another C here to the downside. 1, 2, 3, 4, 5 wave structures, which can also be counted as a diagonal. 1, 2, 1, 2, 3, 4, 5. If it's a diagonal, this 5th wave has an invalidation. We'll be looking for longs. Okay. So what I want to do now is look at this little local structure, and unfortunately I have to go into the smaller time frames. Okay, I like to trade on the 15-minute and 1-hour time frame. It's my favorite time frames to trade on. But to make sense of this little structure, okay, I'm going to spend a little bit of time here on the 5-minute time frame. So I can count this structure as an impulse. That structure to me is a beautiful impulse. 1, 2, 1, 2, 3, 4, 5, 4, 5. Where we took the short last night. Okay, sorry guys, just hold on quickly. I'm getting an important phone call. Let me just... Sorry, legends, I just need to go and fetch a delivery outside. I'll be back.
There's something moving underneath the silence. You can't stop it, you can't see it.
There's a spark you can't control. No face, no throne, no single soul. No crown, no king, no guarded gate. Just coded rhythm, rewriting fate. They don't trust what they can't hold. They fear what they can't control. But every system once began as something small no one would stand. They laughed at fire when it was stone. Now whole cities glow from what was thrown. Every empire starts unseen. Every future starts a dream.
It's rising, it's breathing through the cracks in the ceiling.
You can doubt it, you can fight it,
but you won't stop the feeling. There's an invisible fire burning under the ground. You can't cage the wire, you can't shut it down. We are rising higher, no walls around. What you can't see now will shake this town. It's burning brighter. No turning back now.
yeah. It don't knock, it flows through cracks. Built by hands that turn their backs. No permission, no applause. No signature from broken laws. They building towers made of glass. I'm building shadows built to last. They measure worth in what they see. I measure mine in legacy. Call it risky, call it strange. Every revolution looks that way. What they mock today is small. Tomorrow stands 10 stories tall.
It's growing, it's glowing, even when you don't know it.
It's silent,
But violent, and nothing can control it. There's an invisible fire burning through the sound. You can doubt desire, but you can't drown the ground. We are climbing higher, feet off the ground. What you can't see now will turn this world around.
I've been doubted, I've been tested. Watch belief get dissected. Watch fear spread contagious fast. But truth don't break it out last. When pressure don't erase the flame, it only teaches it to aim. And when the dark feels permanent,
That's when the spark turns permanent. There's an invisible fire burning us now. You can't pull the wire, you can't shut it down. We are rising higher, we won't bow. What you can't see now will own this ground. It's burning brighter. We're walking through
Right, sorry about that, legends. Holy crap, I don't know what my wife ordered, but I had to go pick up the delivery. And boy, did I struggle to carry that thing by myself. I don't know what is in that box. Had to literally drag it across the floor because I couldn't pick it up. Just catching my breath. Right. Ooh, price getting a nice little bounce here to the upside. I want to see what CVD is doing. Yeah, CVD is relatively okay. There is some local bullish CVD forming. And man, I just need to catch my breath here. Okay, I want to see if this is going to be a successful breakout. Right. A nice little scalpy here to the upside. Target the high, stop goes below the low. Risk to reward is not great. Anyways, guys, let's see if the momentum can continue here to the upside. Scalp trade based on the D-line strategy. One of the first strategies that I learned to trade was the D-line strategy. I mean, there's no ways that I'm entering over there. The risk reward just doesn't make sense where price is at the moment. You should have caught the breakout over there. Some nice volume kicking in, so I'll see how that plays out. I'm just trying to also catch my breath over here. But now I need to try and figure out if this is a bullish structure. Okay, so I can count. Let me just put the music is nice and soft. Okay. Right. I can count a 1, A, B, C, W, X, A, B, C, 2. Okay. And this could now be 3. I don't know if that did overlap. It can form a 5-way structure like this. I just want to see if there's no overlap there. No overlap. I want to see if it tapped the 0.618, if it's a normal impulse. Nope. So this could still be the scenario where price claims the high and rejects again. And then this has formed a larger 3-wave impulsive structure. Remember, as per the examples that I've shared, 1, 2, 3, 4, 5. No, there's enough volume in that move. I would expect third wave to continue, and I'll get to the most bullish case scenario. I'm just trying to see if there's a chance for a rejection here above the highs, or above this high for potential short. If price is now going to move up in a little fifth wavy over here, because I think if this structure had to play out, it will give the market enough time to still consolidate before tonight's interest rate decision. Or, okay, I'll get to that scenario now. If price takes the high, I want to see if I have some levels. That's not the question. Will I consider a short? That's basically what I'm trying to figure out. Will I consider a short? If price takes the high, I will consider a short from the 0.7. Which is the value area low. If price punches up a little bit more, obviously that point of control is the best zone. I just don't know if it's going to get there, but it is a long first wave. Okay, that's something else I want to check out quickly. I just want to take the lines out the way. Guys, I'm just doing live analysis over here, so I'm trying to explain and do this at the same time, so bear with me. I'm getting there. Okay, I'm just trying to build some confluence over here in terms of will I consider a short. Okay, is there a chance? The best zone is this high volume node at the 0.786, but I do realize it could not get there. I just want to do a quick trend-based flip to see how long that third wave is, because then, depending on what I see here, okay, so this third wave, if this is the scenario, this third wave is shorter than the first wave, which means that if it's going to form a fifth wave, if it's going to form a fifth wave, it's most probably going to take the high and reject, because your third wave is not allowed to be the shortest. Do you guys get what I'm trying to say over here? So the invalidation basically for this scenario, that's the length. Oh, I need to take the third. Sorry, I need to do this. The invalidation for this scenario is right over here. Make that red. Okay, good morning. Bug Maria, welcome to the live stream. See, you just popped in. Okay, now I can clean up the kitchen, as I like to say. I can clean up the kitchen a little bit over here. Okay, so for this scenario, 1, 2, 3, 4, 5, that's the invalidation for this fifth wave, for this to be a 5-wave structure. Because if price pushes up here and taps the invalidation, it means that the third wave is the shortest and it's not allowed in an impulse. Okay. There is an insane bullish case scenario, but I don't know if the market makers are going to give this away right now. Let's see how it happens. If price shoots here to the upside, then I have to consider the following. 1, 2, 3, 4, 5, and then this is a 1 A, B, C. I don't know if that tapped the 1.618, but let's just do it from there. 2, 3, 4, 5. Okay, but you guys get the idea. Nested 1-2s. That's the most bullish case scenario if price takes the invalidation. 1, 2, 1, 2, 3, 4, 5, 4, 5. So I will consider a short in this zone, speculating on a 1, 2, 3, 4, 5. Invalidation, $65,000, 262. And that's basically just trading the local structures. Okay, let's make this a different color. Oops. Change the wrong color. Let's make this one green and make it the bigger one, primary. Okay, or this is still a large, so this could be a 1. Okay, it forms a larger 3-wave structure, then it goes up like this corrective structure. It still forms a larger corrective structure before it continues up. Okay, and if it does, because this could also be an A, B, C, where I'm considering the short. Okay. So first shorting opportunity for me, basically going through all of this, is value area low 0.7. That's the first shorting opportunity. If I get a rejection, price needs to pull back below the low, exactly what happened here last night. Price needs to pull back. I enter, stop, okay. Price can fall to the downside. That's what I'm looking for. And this is just a scalp, guys. This is just a little bit of a scalp. And what I would need to do is I just need to sign into one of my other exchanges. Where, just need to think. where I have the sign-on for that exchange. I just need to get an account ready over here, because I can't enter a short on Bluffin. I'm already in a short. I need to do my 10-factor authentication. Just want to get a little fun trade ready for this long live stream. Oh, there's some email verification codes as well. Let me do this. Sorry guys, it's just taking me a while to get signed into this exchange. I want to get ready for this trade if it does continue here to the upside, so that, you know, I can do a little bit of a live trade here on the stream. I won't be able to take it on Bluffin because I'm already in a short. Okay, I'm already in a short on Bluffin. If I don't have multiple positions enabled because I'm still in a trade. Right. Okay, I'm signed in. Thank goodness. That didn't take as long as I thought it was going to take. There we go. So if price continues up, that is the short, little scalpy scalp short that I will consider over here. I'm going to set an alarm here. If I get busy talking about something else, then at least the alarm will go off. Yeah, if price is not going to get to my area of interest, no short for me. I'm happy, guys. I'm very happy to miss trades if it does not give me what I want. If a trade doesn't give me what I want, I don't take it. It's as simple as that. If it wants to fall down here, then I'm not taking the trade. But if it continues to chop up, then I will consider the trade at my area of interest. Okay, I'm not going to FOMO into a trade. Just like I missed the long here to the downside. I was waiting for this daily level to take this long. I wanted to take this long yesterday, and I shared this inside of the community. I wanted to take that long. Yeah. Missed my level, missed the long. Okay, is what it is, right? I have no issue missing a trade. I don't have to trade every single opportunity, and that's why I always say, guys, I trade what makes sense to me. I don't have to trade every opportunity. If price doesn't get to my area of interest, then I wait for something else. It's as simple as that. But it needs to make sense for me. Okay. 1, 2, 3, 4, 5. Yes, that can be counted as a 5-wave structure. This correction could be done, or it can form a larger 3-wave structure or a 3-wave structure without taking out the low. This could be a 1, 2, 1, 2, 3, 4, 5, 4, 5. Okay. If price takes this low, if price falls down here and goes into the territory of number 1, then a 1, 2, 3, 4, 5 goes out the window. I remove the invalidation, and then the only bullish option that's left is nested 1-2s, because I don't even think a diagonal is going to work. It looks like it will be expanding, but I'll check that out now. Because if this is a B wave forming here to the upside, if this is a B wave forming, it can form a 3-wave structure. Reject, take the low. So I'm literally looking for that little scalp. That's what I'm looking for, little scalp. Okay, and if I don't get that, I don't take the trade. It's as simple as that. Sorry guys, I know it looks very messy on my chart, but usually I like to switch on all levels, look for confluence before I make a trading decision. Okay, that's just how I like to trade. And then once I have my levels and things ready, I wait. And if it doesn't get to my area of interest, I don't take the trade. I wait. I will then take something else. A, B, 1, 2, W, X, Y could form a triangle. Oh, there's so many scenarios that could play out over here. Let me go through some comments. Okay, maybe we're grinding to 65,800. 65,800. Now that's still a little bit further up. Welcome to the live stream. Great to see you here, Maria. If price goes up right now, I'm afraid that tonight we'll see a lower low. Yeah, there is an interesting scenario where price can take the high and fall down. Okay, well, what I mean by high, price can take this high, price can do this and fall down and take the low again. There is a scenario where it looks like market structure is changing, it doesn't form a higher low, and price takes the low again. And I have my levels ready. Okay, there's still a daily level at $66,522 where I will be looking for a reaction. It's a little bit high up. There's still a level at, I mean, there's still a level, there's still many levels that I can pay attention to. Okay. Golden pocket, daily level. Very interesting. 0.9. That must probably be a ABC, because remember this structure, if it's a three-wave structure, well, it is a three-wave structure. Okay, there's no question about it in my mind that this is a three-wave structure and this is a A. Price can form a B, has to tap the 0.9 and fall back to the downside, and a B, C. So definitely a zone that I will be paying attention to. Daily level 0.9, also a B flat target. Okay, are we going to get this little scalpy scalp trade? That's now the question. Just want to pay attention to what's happening here. Price is pushing up again. Mm-hmm. 15-minute time frame is my favorite time frame to trade. 0.5 is a little bit further up. It's also the 0.7, so I don't need the 0.7. I can just use the 50% Fibonacci together with the value area low. And basically what I'm looking for is the following. I want price to pierce the level, or at least tap it and reject, so that I know where to put my stop loss. If price is above my area of interest, no trade. Price has now tapped the 0.9, which is a flat target. So if price is going to form, if this is a B, C, price can reject here and take the low because it did tap the 0.9 with a fib from the high to the low. I don't even need to draw the fib, I can see it. Okay, very close to the highs. And I can delete this. I am keeping an eye on the price over here. Come on. $0.9 has been claimed. That's where price is getting the rejection at the moment. So that is where price can reject. And that is speculating on an A, B, C. Okay. Maybe price forms a larger three-wave structure. Rejects, then falls down. I don't know, but that's the only one I want to trade. I don't want to trade this. I can be picky about my trades. Okay, volume is increasing. well, smaller time frame. Just want to see what it's doing here on the 1 hour. No, that could still be part of the corrective structure. Ooh, which level did I delete now? Ka-ching. So I'm basically keeping an eye on the 0.5 for rejection. Price can reject here. That is a B target. If this is your impulse, 1, 2, 3, 4, 5. Okay, this could be an A, B, C, where I'll be looking for longs. Because after a 5-wave structure and a 3-wave corrective structure, price can take the high again. So I don't mind missing the short to get into the long. Okay, unless price still gets to the area of interest. Just a little scalpy scalp trade over here. Bob Proctor said we could go to 3K. Yeesh, maybe not today. Okay. Annelies, middag Dewald, altyd lekker om saam jou hier te kuier. Lekker man, welkom hier by die livestream. Jan, Kus, May, Berg, 1398, welcome to the livestream, man. I'm assuming you're from South Africa, because this is Afrikaans, guys. If you don't know what this is, what language I'm speaking, it's Afrikaans. It's my native language. I think we could be forming a contracting diagonal down from 66. Yeah, I did look at that. Right, let me just put my alarm back here. While I wait. Okay, and I can clean up the kitchen. I just want to see if that contracting diagonal here to the downside is valid. That's what I just wanted to quickly check that, if it is valid. Okay, so what I'm basically looking at is a 1, a 2, a 3, a 4, and a 5. Okay, let's make it red because it's bearish, right? Let's make it red. I want to see if this is valid. First thing I check for is it contracting? Whoops, not that one. I don't know if you guys enjoy Elliott wave theory as much as I do. Okay, yes, it is contracting. I can see it's contracting. Even if price takes that high, it's still contracting. Okay, now what I want to see is, I want to see if the fourth wave invalidation. So I'm measuring the second wave. Ooh. Did that 1-to-1 extension get claimed? Yeah, I will not consider this, legends. I'm not going to consider this. So from this low, just to explain to you why I'm not considering this, from the low to the high. And I mean, I can even be cheeky and say, okay, I'm going to use this high. Okay, I'm using that high. That slightly lower high over there, I'm using that one. Okay. So I'm looking at this structure. In a contracting diagonal, your wave 4 is not allowed to be longer than your wave 2. And it just claimed the 1-to-1 extension, so it's not valid. Some Elliotticians will argue against that fact and say it's still valid. For me, it's not valid. Okay, for me, it's against my rules, and I think according to Robert Prechter and Frost, it's also not valid. So I will not consider this because of that. You see, and this is now the beauty about Elliott wave theory, is that it has an invalidation for this scenario. 1, 2, 3, 4, 5. Because now I wanted to work out targets for this fifth wave, which is usually the 0.618 and the 786, where you get the bounce, price goes up, and then it falls down. I can trade that, and I can trade that. I can long this, and I can short that. But now I can't consider this scenario because of that. So according to my trading rules, I don't look at the scenario because wave 4 is longer than wave 2. So I can remove this. Now, take that out the way. I want to see if it can still do something similar. Yeah, it's just not pretty, guys, but I mean, I have to consider it. Expanding diagonal. Okay, 1, 2, 3, 4, 5. Expanding structure, not great. Okay, but I can label that a A. I can label this mess a B. And I can label that a C because I can see a 1, 2, 3, 4, 5. So this could be the end of something. Or it forms a larger corrective structure, but it could be the end of something, which means that price could now 1, 2, 1, 2, 3, 4, 5 itself out of here. Okay. Or ABC, still expanding structure, can also give you a W. You have an X, but now here's a problem. Okay, you form an A, B, C to complete your Y. So Y cannot be completed over here. It's difficult to count this structure as a three-wave structure, okay, to the downside. So now that looks very similar to the contracting leading diagonal. But price basically forms a larger corrective structure in a WXY. WX, ABC, and a Y. So it's still an interesting longing opportunity for me here to the downside. Remember, legends, as the structures unfold, I keep the community up to date. Andy is inside of the community today. When I'm not on YouTube, I'm inside of the community. If you want to be part of the community, send me the word access to my Telegram. I'll send you the instructions on how you can join. If you want access to our tools that I use from a day trading perspective, everything under one roof. Okay, like CVD is the one that I use most often to see bullish and bearish CVD. What is market makers doing and what are retail doing? Okay, so I can see here, I just want to refresh, make sure that it's crispy clean. I can see some bullish CVD, local bullish CVD forming between those two pivots. So if the high gets taken, the bullish CVD will play out. But if you want access to the tools, here you go. Okay. One of the requirements to unlock all the features inside of the tools is you need to sign up with one of my affiliate partners, make a minimum deposit, and you can unlock the tool. You'll see the instructions inside of the tool. If you want to unlock all the features like volume delta, what is it called? Footprint, the footprint chart that Andy spoke about yesterday. Okay. Remember, today we have high impact news. For those of you that don't know, I'm sure if you are a trader, you should know. Okay, we have the Fed interest rate decision at 8 o'clock Central European time, and at 8:30 we have the Fed press conference. So it's going to be a high impact day or night tonight. Okay, and we can watch that together and see how it impacts the price of Bitcoin. I'm still in the short here on Bluffin. I'm looking for a little scalp here, guys, on my 2-bit account. Okay, nothing crazy. And the best long for me was, yeah, that was the best long. If price falls Okay, where am I going to look for the long? If I miss the long, where can I still get into the long? That's now the question, because this could be an ABC. Yeah, it does look very three-wavy to the upside, so that could definitely be a B wave to the upside that now rejected at the 0.9, which is a B flat target. Okay, if this is a B flat target got hit. So price could now be falling down in a C wave. For the bullish case scenario, should not claim the low at $63,570. Now the question is, where will I be looking for the long? So there's a couple, I know guys, I'm going to mess it up. I'm going to dirty the kitchen to make some delicious food, and this is what I usually do. Okay, I have my fib extension levels that I smack on here. I also take a fib retracement from the low to the high of the structure. And now you can see it gets a little bit messy with all the levels. Which line are you even looking at? I can just keep it a little bit simpler and maybe just do this. Okay. And 0.7 looks like the best bouncing zone, okay, which is basically, technically, the best bounce looks like it's, yeah, 0.786, naked point of control, highest amount of volume, okay. Okay. If you are speculating, guys, because now, you know, like I said in the beginning of the stream, this could be bearish case scenario. Most bearish case scenario is price. So, you know, as a trader, you need to decide how you want to position yourself. 1, 2, 1, 2, 3, 4, 5, 4, 5 to the downside. Price should, invalidation is the highs. Price should not take the highs for the most bearish case scenario. So, the trading opportunity is as follows. Stop goes above the high, you build a position in the zone, and you're targeting much lower. Let me just clean up the kitchen a little bit. That is the shorting opportunity, because I know where the invalidation is for this scenario. In the most bearish case scenario, where price could really go and eat up all of the liquidity below these lows, okay, and this is the one that could get really nasty to the downside, is a 1, 2, 1, 2. Price should not take the high, because that's the invalidation for this bearish case scenario, and it falls in a 3, 4, 5, 4, 5 to the downside. So you can see from a risk to reward perspective, this is a very attractive trade. Bullish case scenario is that this is the end of a three-wave structure. It's the end. Okay? And price continues up and takes the high. Invalidation is the low. And this is why the long yesterday for me was a great long to take. For those, for the community members that did get into that long, because I saw some of you did take the long from the money shots that I saw. Okay. Well, it's definitely a position where I will leave a runner. I would have definitely paid myself on the way up, but it's, you know, it's definitely a position that I will leave a runner, because that is the long that I wanted to get in. Okay. But it's to take the high, stop goes below the low. You can see if you're entering right now, then for me personally, the risk to reward doesn't make sense. So can you see why, unless you're speculating on the double 1, 2 and your stop loss goes below that low, then the risk to reward makes sense. Because from a bullish case perspective, you want to see a 1, 2, 1, 2, 3, 4, 5, 4, 5, and you do not want that low to be claimed. So you could de-risk the position. So that is the long opportunity and that is the short opportunity. I'm already positioned in the short, so I don't have to worry about the short. Now this long is not going to be an easy long unless I just say, okay, I'm going to bank on the 112. If price takes that low, I don't want to be part of this trade because for the moment, the structure to the upside is very much a three-wave structure. Yeah, I mean, unless it forms a dirty little diagonal here to the upside. That would be sneaky if this is a diagonal. If this is a sneaky diagonal, sneaky, 1, 2, 3, 4, 5. Price takes the low, and it still gets the bounce. Sneaky. Diagonals unfortunately never carry the highest probability, and this is why I'm considering 112s rather. Okay, nested 1-2s, 1, 2, 1, 2 carry higher probability than a leading diagonal, but it is valid. Okay, that could be a sneaky little 4 and 5 over there. Sneaky. Price takes the low. It looks like the 112 gets invalidated and price still moves up. That could be sneaky. Okay. That's what I'm saying, guys. You know, I wanted to get into this long. I missed it. It's okay. I'm still positioned in the short. But now, for me, the long is tricky. Okay, and sometimes I can choose not to take the trade. The long for me is tricky because I know it can be a diagonal as well. Stop is supposed to go below the low. But from a risk to reward perspective, then the trade doesn't make sense for me. Okay, I'm targeting the highs. I build a little position in this zone. Okay, risk to reward doesn't make sense for me. It's a big stop loss compared to what I'm going to make. Okay, I don't want to risk $100 and only make $69. So I can choose to stay out of the trade or just lower position size. So, and I know some traders will trade like this. They will open up both. They will do this in preparation for the FOMC later this evening. And I'll say, okay, well, that's how I'm going to play this. I know exactly where the invalidations for both scenarios is, and I'll make money with one of them. Okay, I know, because I've seen it. Some people is going to trade like this. Okay, position themselves in the schlong. And right, and maybe I should enter maybe both of them just for the fun of it and see which one plays out. Okay. Let's go through some comments. I get scared when you say inside the community. Right, guys. But I mean, if you want to join the community, that is where I spend a lot of my time when I'm not on YouTube. Yesterday, I did a lot of updates. We waited long for the trade. You know, I even did a couple of updates where I said, guys, price is not in a zone where I want to trade. I think price was here. Price was doing this. And I said, I don't want to trade that. I'm waiting for my areas of interest. I'm waiting for the long, or I'm waiting for the short. Okay, the short was there. Range high. I'm waiting for the short. And then later that evening, price came to my area of interest. And then when I counted the structure to the upside, I was like, okay, that is a valid short, but it could be short-lived. And this is why I took aggressive profits last night. Okay, because I know 5 waves up, high chance for a corrective structure and continuation back to the upside. I wasn't banking on this short, guaranteed to take out the low. I left a runner. Of course, always I leave a runner because you never know. Let me just go back here to the comments. I bet we'll crash after FOMC. we'll see what's going to happen. I think it depends on whether it's going to be hawkish or dovish. So I mean, the inflation data came in much lower than expected. So maybe we get a little bit of a surprise today from a bullish perspective. I don't know. Inflation data, do you guys remember when the inflation data came in the last time? It came in much lower than expected. This is why we're seeing the rally here to the upside. Okay, I don't remember exactly when it came out, but I saw a nice little push to the upside when the inflation data came out, way better than expected. So based on the inflation data, we could get another bullish thing happening later tonight. We'll see. I will be sleeping, dreaming of surfing on Elliott waves. Rudy, welcome to the live stream. Great to see you here, man. I hope you're enjoying your time there in Thailand. Okay, already took short from 64,550. 64,550. Okay, great. Yeah, some of you, I know, we have some experienced traders inside of our community that must probably traded this little 0.9, okay, or got in a little bit higher, 1, 2, 3, 4, 5, definitely a valid shorting zone, okay, and yeah, I'm in from a little bit higher, so I don't have to be too concerned or stressed about looking for the short. Not that I'm ever stressed, okay, but I'm already in from higher. I've already taken some profits. In the most bearish case scenario, if price falls down here, then, it's going to start printing. That's what I'm hoping for with a short. When it starts falling and accelerating in a double 1-2 to the downside, this trade is going to start printing. Okay. I'm more interested in longs, but I missed the long. I was really interested in this long yesterday. Missed it. Because sometimes, and I think Andy has spoken about it as well, okay, you're waiting for your level. I was waiting for my daily level. I can actually show you guys. Let me just see something here. Ladies and gentlemen. Just want to see something, yeah. Doom. Yeah, I suppose there was still time to get in, but anyways, I'll get to that in a moment. Can you guys see this? Yes, you can. Let's drag it a little bit more. Okay, that was the scenario. Oops. Waiting for the 5-wave structure down. This is what I shared yesterday in the community. I want to long that daily level like a crazy person. I didn't say that, but I was ready for that long. Based on my higher time frame analysis, I knew that could be a nice little bouncing zone. And I was too focused on the daily level. And then I missed it. But, there's a but, okay. I was waiting for the short. If price continued to move up, I was waiting for the short at the 30-minute order block in the range high. Price moved down first. Okay. So this is how I kept the community up to date. Consider scalp short, blah, 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 blah. Andy gave an update, went live, and then this happened. Okay. So price was still close enough. So one could argue I could have gotten in because I could have still played this SFP when I highlighted to the community. But based on this update, I saw community members took the long because they knew that there was a high chance for the 5-wave structure to be done. And at a bare minimum, you expect a corrective bounce back to the upside. You can take advantage of that. Sometimes I'm too fussy, okay? I miss my long and then I just leave the long, okay? This was definitely an opportunity where I could have gotten back into this trade, even though it front run my level. But I saw after I posted this, some community members did get into the long, but I think also based on what Andy discussed last night in his live stream, push up, pullback, and some people got into the pullback. So there was still time to get into this long. And then lots of updates, basically price, okay, rejected, range high, I pointed that out. If you did take this long, good area for a TP, price fell to the downside. So I told everyone, if you did get into the SFP from the range high, this is where I would have taken some profits. I didn't take that one. But if you did, that's where I would have taken profits, protect position, cover stop loss, okay? Because I knew that there was the possibility for another push up. Okay, right. And then I posted, those are the two levels that I'm watching for the short. SFP from the high, or it rejects from the 0.5. So I'm watching those two levels. Then I zoomed into the 1 minute time frame, and I posted this and I said, I'm playing the rejection at the 1.236 SFP from the high. And that is where price got the rejection and fell to the downside. So a lot of updates happening here inside of the community, and then I just gave some updates to say, guys, that's where I took the short. Okay, this was basically my planned price fell much further to the downside, so it turned out to be a better trade than what I expected. And trade nicely in profits, took some more and leaving a runner. Well done to those that took the trade. Andy also did a couple of more updates. That's basically the updates that Andy is providing today in the community. I don't want to spill the beans here on YouTube because, you know, the community deserves some special attention, and I don't want to share everything that's happening now inside of the community. But if you want to be part of the community, if I'm not on YouTube, I'm inside of the community, sharing how I personally trade and approach the markets. Send me the word access to my Telegram and I'll send you the instructions on how you can join. If you want access to our tools that I use from a day trading perspective, where we have the economic calendar, we have CVD, we have the footprint chart that Andy spoke about yesterday. Very interesting. Fear and greed. Everything that I need from a day trading perspective under one roof. Okay, you can also, there's the link if you want free access to the tools. And in order to unlock all the features, you need to sign up with one of my affiliate exchange partners, make a minimum deposit, which is your money to trade with, and it will unlock the tool for you. You just go through the steps. You'll see the steps are very straightforward. Okay. Right. I want to get back here into CVD. All this CVD played out over here. Bully CVD played out, bully CVD, berry CVD. All these CVDs has played out over here. 75% accurate at the moment. 71 resolved. 53 played out and 18 failed. Absolutely amazing. Where's that delete button? Can take that out the way. Okay, also what I want to do is, what did I do here? A little mini crash course on how to use CVD. It's very simple. I will go through that in a moment. Okay, but I do not need the lines. I do not need that to read CVD. The development team put this together for people that still struggle to read CVD, so it shows you bullish and bearish CVD without you having to look at the lines and try and figure it out. Okay. Let me go through some comments and then maybe I'll do the little crash course. But maybe I'll ask people to vote. But these are basically the two scenarios. Well, the two trading options, right? Sorry, I missed the beginning. Anyone can say if the expectation is long. Well, I'm still positioned in a short. I'm not long yet. Okay, the risk to reward from a long perspective, for me, technically, it still does not really make sense. Okay. we're trading at the point of control. Yeah, let's check here on the 4-hour time frame. Take that out the way. Let's see where we are inside of this range. Yeah, at the point of control. It's holding this high volume node. Oof, what a perfect bounce. Just looking at this. Do you guys see that high volume node there? There. Look at where that bounce took place yesterday. High volume node. Beautiful. And now it's still above the point of control. So technically this is still bullish. Okay, it's holding the point of control where the most amount of volume has been traded. For now, it's holding this level. Another way to get into this trade here on the larger time frame is you wait for the break of the trend. That's another way to get into the trade. You wait for price to break out. Maybe it gets a little retest, builds that bull flag, and then pops out. Okay, so that is another trading opportunity using the D-line strategy. Right, but there's definitely a chance for more upwards momentum. The price is ever so slightly still forming higher low, higher low, higher low, higher low, and a cheeky little higher low that almost took out that low. So the structure technically is still bullish. So based on structure alone, it's bullish. Price is forming higher highs. Okay, I'm talking about the local structure. I'm talking about this local structure. Higher high, higher high, higher high, higher lows. The structure is still intact. So there's a chance, 3-wave correction, continuation. Okay. Impulse, 3-wave correction. Impulse, 3-wave correction. Impulse, 3-wave correction. Oh, that is a mess. I'm not going to lie. Okay, that's an absolute mess. That looks like a 3-wave structure. But you could say impulse, 3-wave correction. Okay, and every time price claimed the high, claimed the high, claimed the high. Maybe it's going to claim the high again. Okay, the reason I also think the probabilities for price to continue the range and at least claim the high again. And this is now where I'm going to get to the larger time frame analysis. I just want to take this out the way. I'm waiting for that. This could be a nice little breakout or a rejection. Okay. Anyways, I do have a trend with my alarm set there already for potential long that I will treat as a swing trade. I will let the community know. Because always, you know, guys, if I do enter or plan a swing trade or a little scalp trade, I share that inside of the community. If you want to be part of the community, you can send me the word access to my Telegram and I'll send you the instructions on how you can join. One thing that I wanted to point out here on the higher time frame. Okay, remember during the beginning of the stream, I spoke about why I technically do not see a capitulation from here. From where price is at the moment, I think there's a low probability for capitulation. Okay, and it's because of what has formed over here. I just want to see if I have my macro scenarios here. Now that was the count for that corrective structure. Very interesting. Okay. Anyways, let me do it fresh. there's a 1, 2, 3, 4, 5. There's a possibility for an impulse to the downside. Okay. This could be worst. I'm trying to paint out absolute worst case scenario at the moment. This is now what I'm working on. Worst case scenario. This is your ABC correction for this impulse. A, B, C. From a timing perspective, does it make sense? I like to take my fib from the high to the low of the structure. Yes, the high was made after the 0.382, so worst case scenario, that's the high. And now you want to see a bigger correction, of which this is only the first leg. So there's still more downside to come. But now here, even in the worst case scenario, here is where the problem lies. Okay? Because what I'm trying to paint out over here is the following. Let's draw this out. This could be an A. That's your B, and it's busy forming a C to the downside. So basically what I'm looking at is the following. I'm looking at that. Okay, I'm trying to paint out worst case scenario over here. Yes, it can form a 1, 2, 3, 4, 5, but guys, that's going to be absolutely brutal. Okay, let's not be that brutal. Let's just say this. Okay. So what I'm looking at is I'm basically saying that, well, then this is the first leg inside of the C wave, because the C wave has to be a 5-wave structure. 1, 2, 3, 4, 5. It has to be a 5-wave structure. Okay, there's only one leg so far. I'm painting out the worst case scenario. And I'm trying to explain to you why I'm not expecting a capitulation here to the downside. So if this is your wave 1, 1, 2, 3, 4, 5, and a wave 1, that high was made too soon from a timing perspective. So let's go to the 12-hour time frame so I can get those pivots nice and crispy. So from the high of the structure to the low of the structure, you can see that high there was made before the 0.382. Now for me, that impacts probabilities. And that's issue number 1. It's too soon. Issue number 2 is more than 75% of the time after an impulse, the correction at least claims the 0.382 fib retracement. And I have backtested this in a previous live stream, which I'll do again, is price did not, from a timing perspective, it's too soon. And from a fib retracement perspective, it did not hit the minimum requirement. So there's 2 issues already. And that's why technically I'm not expecting a capitulation from here. If price does this, then it can capitulate, because then it meets the time requirement and it meets the fib requirement. And remember guys, this is just probabilities. Okay, and I'm a probability trader. So what are the probabilities of price nuking to the downside? Low, because of the 2 issues that I see at the moment. And I can show you a couple of examples. Okay. I hope you find this interesting. Remember to smash up that like button if you do enjoy the content that I share. If you're new to the channel, remember to subscribe for future notifications. And right, I do keep the community as up to date as I possibly can. On when I'm not on YouTube, I share what I do from a trading perspective inside of the community. There's also private live streams, which I will do another one this week again. When Andy's not on YouTube, he's also inside of the community, which Andy is now spending his day inside of the community. I do see that he's sharing a lot of updates, some an interesting trade that he got into as well today that he shared. Okay. And if you want to be part of the community, send me the word access. There's my Telegram, and I'll send you the instructions on how you can join. Okay, so now what I wanted to do over here, and then I'll go through some comments. Okay, very quickly. When I say the 0.382 FIB retracement gets smacked every single time, this is what I mean. Okay, I'm looking at this drop. I'm looking at this drop, and I'm looking at this drop, and I'm looking at this drop. Every single time up until now, the 0.382 has been claimed, if not higher. Okay, so from the high to the low, almost 0.618. That zone was hit. Okay, again, from the high to the low of this structure, where did price reject? Almost at the 0.5. From the high to the low of this structure, where did price reject? Past the 0.382. Now, okay, this is the point that I'm trying to prove over here, or just to show over here, from the high to the low, the 0.382 has not been claimed. So because I'm a probability trader, I'm like, something's wrong over here, and regardless of what happens, worst case scenario, remember, in an A, if this is an A, and I said worst case scenario, that's why I shared the ABC scenario, is price forms a B flat. It takes the low, but it then takes the high again, and it forms a flat corrective structure. So I am not expecting a capitulation. I'm expecting that it takes the low, okay, it takes the low, but it bounces back up, high chance to take the high again and get into the Fibonacci levels. Then when price gets here, I would say, okay, now it can dump. It makes sense. At least it's meeting all the minimum requirements. And that's just a simple back testing that I've done. Okay. And I can do the exact same thing from a timing perspective. If I go and take my time fib from the high to the low of the structure, you'll see that that's past the 0.382. From the high to the low of the structure, that's past the 0.382. From the high to the low of the structure, that's way past the 0.382. And now from the high to the low of the structure, that did not pass the 0.382 from a timing perspective. So can you guys see, I mean, what are the odds of price doing that? Go to $40,000, $30,000. Yes, I'm not saying that price can't take the low. I'm saying that if it does, I expect a bounce in that zone. And that is why longs will still look interesting to me even if price takes the lows. Or price just forms a three-wave structure. It doesn't even get here. But that's where the shorts become interesting again, because you can also see after every drop, three-wave up, down, three-wave up, down, three-wave up, down. Oops, down, there, down. Three-wave up. I just see red flags when I see a three-wave structure up, because you can take the low again. Okay. So for people saying that the bull market is in full swing, and I have seen people talking about this is the low and the bull market is back, baby. I need to see a proven five-wave structure back to the upside. So basically what I'm looking for is not this. I don't want to see that. Okay, I want to see this. And I know for the legends out there that's seen me talk about this many times, I know there's a lot of new people here as well, so I'm just painting out the picture. Okay. I want to see that. And I'm very happy if I'm not positioned, which I am in my spot positions. I was very vocal about, I bought spot bags at $60,000. I was very vocal about that. Okay, fear and greed. Anyways, blah, 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 blah. There was a lot of reasons why I added to my spot bags over here. I did not buy again. Price is at the same level. I don't want to buy twice at the same level. I want a discount. So if price falls down, I will add. If the bull market is back, but you can see there's not a high probability that the bull market is back. I want to see a proven 1, 2, 3, 4, 5 wave structure to the upside. 1, 2, 3, 4, 5. After I see the 5 wave structure, okay, now you have a higher high. Market structure is starting to change. That's where the opportunity lies for me to join the next move back to the upside. So for the people that are saying the bull market is back, I need to see a proven impulse to the upside. And at the moment, there's no proven impulse to the upside. Okay. So in this scenario, one could argue, because I see some people, and this is now why some people are saying the bull market is here, baby. And I'm not saying it's not, it just needs to prove itself. That can be your C wave. A, B, C, bull market starts from here. But now this structure has not proven itself to be a 5 wave impulse yet. It is so far looking better than this and better than that, because these, do you guys remember, that was a diagonal, that was a diagonal, and there was a diagonal in that structure as well. It's not a great way to start for the bulls. A diagonal is never a great way to start, because it's the only way I could count an impulsive structure was diagonals. Now here things are looking a little bit more interesting. It's a completely different new structure, and there's some bullish options still on the table that does not include a diagonal. So there is a chance that this can be the low, and it has a better chance than that low and that low. Okay. A scenario that I find really interesting is, and I think I do have it still saved, and then I'll go through comments. Just want to share this scenario. Okay, maybe before I share that scenario, let me first go through some comments. Remember to smash up that like button. And let me see what the community is up to. I'm a bullish bear. Yes, exactly. BTC since 2010 may have for a 5 wave structure. Now it's likely taking ABC down. What would be the minimum target for the ABC correction? Since 2010, are you talking about weekly time frame analysis? The 5 wave structure. Yeah, I'm not going to go a reach tie. I'm not going to go that far back, okay? Because even if you have an answer to your question, it's going to take months and months and months for that scenario to play out, okay? I'm focused on what is this, because I can, in the short to medium term, in the medium to long term, I can trade this. The most interesting structure for me from a technical perspective is this. I actually don't care about anything else, because it's nice to know, but it serves no benefit or value to me from a trading perspective. So for me, since this low, that structure, and this structure is where the opportunity lies from an investment and a trading perspective. Anything before that for me does not matter. It serves no purpose for me from an investment and a trading perspective. So people that do higher time frame analysis going back to 2010, okay, it's nice to know. So what? For me, it's a so what? So what? This is the structure that matters. I don't care what happened before, because I can see a 1, 2, 3, 4, 5, or a 1, 2, 3, 4, 5 ending diagonal. 1, 2, 3, 4, 5. So it's a 1. Oh, what happened? Okay, so I know the structure that is formed since this low can be an impulsive structure. Now, what is this? Is it a high probability corrective or motive structure? For the moment, it looks like it's a corrective structure. Okay, so there's a chance for a higher low, a continuation to eat that high again. So for me, from an investment and a trading perspective, this is the structure that I pay attention to. It's interesting to talk about what happened before that. I absolutely do not care. It serves no purpose for me from a trading perspective, so I focus on what matters for me. Okay, because you're going to have to do weekly, monthly time frame analysis to go that back, and then you're going to come up with a good technical analyst will come up with at least 4 scenarios. 2 bearish, 2 bullish. Which one? It's going to take years for those scenarios to play out, so it serves no purpose for me. I hope that makes sense. Okay, so I'm not trying to diss it in any way. I'm just saying that it's interesting to talk about it, but it serves no purpose, therefore I don't talk about it. Because I can spend hours and hours and hours going to analyze the entire structure since 2010, and I'm going to come up with 6 or 7 scenarios, and I'm going to say, okay guys, we're going to have to wait 3 or 10 years to see which one is going to play out. So yes, can it form a bigger ABC to the downside? Yes. Can it form a larger WXY? Yes. I don't know. It's going to take years for those scenarios to reveal themselves. So what's most interesting is what's happening here locally. Okay, and this is already large time frame. I mean, this happened 6th of October last year. We are now almost back at October this year. Okay, just this little structure here to the downside. Can you imagine the monthly time frame since 2010? So yes, I agree. Interesting to talk about it, but not relevant for me from a trading or investment perspective. Gerald, have you been Bob Prachter Iliaway macro analysis? Have you seen? Yes, Bob Prachter's. It's called. I have seen. Isn't it Rob Prachter? Anyways, yes, I have. Elliott Wave macro analysis. No, I haven't. I have on Bitcoin. 5 waves up from start and correction to 3000 ABC. Yeah, but that could potentially only be one scenario. Remember, guys, a great technical analyst or a Elliottician will have at least 2 scenarios pointing in either direction. And if there's a person only sharing one scenario in one direction, I question the credibility of that person unless he just hasn't shared all the scenarios. So if it's Prachter, or this person is worth his salt, there's another scenario perhaps that he hasn't shared. Okay, got it, thanks. Cool. Hi sir, please don't delete your old devil channel. A humble request. I am learning a lot from all your videos. No, I'm not going to delete it. Don't worry about it. I won't delete it. Okay, hi Devil. I was profitable with good risk management, then green took over leveraged, no stop losses, almost wiped out my account. Your essay. Yeah, I mean, you know, I suppose the difference between traders that stay profitable consistently versus the people that make money now and again, but mostly lose, is that I can tell you now every day there is that battle between fear and greed, your emotions getting in the way. And the only way for me to manage those emotions is to have rules in place. Okay, a simple example, if you're running a business and you are selling hot dogs, okay, let's say you're selling hot dogs and you're running a business, and a Vienna or a bun, let's just call it a bun costs you $1 to buy and you're selling the bun for $2. Why on earth would you go and pay $5 for a bun if you can only sell it for $2? So you're breaking your business rules. There's no ways that anyone is going to sell or buy stock for more expensive than what but basically you stick to your business rules. I need to buy stock at a cheaper price and sell it at a higher price. And I'm going to try and find the discounts. I'm going to try and buy bulk so that I can get it for 50 cents or 80 cents and I can make bigger profit margins. And the same thing applies in trading. Why are you breaking your rules? For example, you take a trade, you go in with 20% of your capital. The next trade, you go in with 10% of your capital. So you're buying, okay, at different prices. You're breaking your business rules. Okay, you have to think of trading as a business, and you have to apply the rules that you would apply in a business. And this is why a lot of people, some people make quick bucks and they get lucky with a couple of trades and then they lose. They burn the account, they get liquidated, they leave, they never come back. Okay, the people that stay and the people that make a success out of it is the people that's built rules that they need to stick to when they trade. I only enter with this position size. I only trade a structure that makes sense to me. I only trade the 0.618 levels. You can have different rules. Every time I enter a trade, I never risk more than 1% per trade. Okay? If I consume alcohol or smoke weed or use any form of drugs, I'm not allowed to trade. If I take 2 losses in a day, I'm not allowed to touch the chart for the rest of the day. I have to reset and only trade the next day. And it's those rules that keeps you from your emotion, that protects you from your own emotions. So the best advice I can give you is you have to treat trading like a business. You have to have strict rules that you follow. And most people that think that trading is a way and a means to make quick money are usually mostly the people that lose everything. And that is why bull markets are so dangerous for retail people, because they do make a lot of money in bull markets. And then they lose everything during the bear markets, and this is why they're not here now. This is why retail's not here. You know, most of retail, when this channel has 5,000 people watching this, I mean, how many people are here now at the moment? 328 people in this live stream. During the bull markets, there's 10x the amount of people on this live stream, and that's retail. Okay, they just here for a quick buck. They don't want to listen to the education. What is Andy and Devil talking about? I don't want to hear about Elliott wave theory. Stuff risk management. I'm here to double my account in 2 weeks. So what do those people do? They go and follow YouTubers that preach that language. They go and follow YouTubers that say that it's possible to double your account in 2 weeks. They go follow YouTubers that give signals so that they can get a ways and a means to do a trading setup that can double their account in 2 weeks. And then they lose everything. So I know that there's a lot of people that don't like what myself and Andy is doing here on this channel because we educate. But it's part of the reason a lot of people don't make money is because they don't know how to trade. I don't know if I'm hitting a couple of notes. Maybe I'm missing some and I'm hitting some. Okay, I hope I am hitting some. But the one thing that I've learned is if you are trading to make a quick buck, mostly people that trade to make a quick buck lose their money. Because they have no system, they have no plan, they have no rules, and they have no commitment to actually put in the work that it requires to stay consistently profitable month after month, year after year. Most people see trading as a means of easy money. It's easy to make money in trading. And they get lucky a couple of times. So it seems even more easy. And then they lose everything because they have no system, they have no plan, they have no consistency. If trading was easy, everyone would make money from it. The reason, okay, there's so few people watching this live stream compared to the previous bull markets, for example, is because it's not easy. It is difficult. It takes discipline. It takes rules. So yeah, I suppose just to come back to your point, the reason I think a lot of people, the advice I wanted to give you is in order to manage that fear and greed monster, okay? Remember, guys, I think Andy nailed the nail on the head to perfection last night when he said that you are only one trade away from your worst decision. Only one trade away. Like Andy used the example, and it's happened to me as well, where he said he traded for 5 months to build up his account. 5 months. He followed his rules. He was consistent. He ticked his tick boxes. He made money. And one bad trade, one bad decision wiped out almost his entire account. And it's happened to me in the past as well. You are only one trade away from wiping out your profits. And that is why you have to stick to your rules. Guys, you will see me when I'm trading Jan Bluffen, for example, okay? When I'm trading Jan Bluffen, okay, I make my $10,000, $14,000, $20,000 trades, okay? You'll see how I manage my risk. Like this short that I took, I could have made way more money. I could have made 10 times the amount of money where price is even now from that short. But I spent most of my position size de-risking my position in that zone. Do you guys remember that day when I took the short? Okay, I'm taking profits, I'm covering fees, okay? I was spending so much of my position size protecting my capital. And now that I've protected my position, I can relax and I can collect my profits to the downside. It's not as much, but it's the consistency that I practice during every execution that keeps me profitable. So that when I get stopped out, okay, when I get stopped out, that's what I lose. I lose very little when I get stopped out, and I make a lot more when I win. Because I stick to my rules. So yes, I could have made easy $30,000 here to the downside with this trade, okay? But if I'm wrong, then I'm losing $10,000, $15,000. So I would rather make less when I'm right, if that makes sense, but almost lose nothing when I'm wrong, than trying to make a lot when I'm right, but I'm also losing a lot when I'm wrong. And that is just how I've learned to trade. Is that the market is designed to take your money. And my job as a trader is to make sure that they don't get it. That's my job. The only job that I have as a trader is to protect my capital. So that if I'm wrong, how little is the market going to take? How little can I pay for the bun that I need to sell my Hardox? You know, that's basically the logic that I'm trying to apply. So yeah, you're literally one trade away from your worst decision. From your worst trade. Okay. King Kai, channel that and analyze the best. Big respect to you and Andy. Absolute pleasure, man. Thanks for the kind words. I appreciate it. And how many likes? Press that. Yeah, guys, if you have not smashed up the like yet, what are you waiting for? Lots of educational content drops in this channel. This is where I teach and educate how I trade and approach the markets. If you want to do this properly, okay. Funny how oil is up today right when Fed needs to make a decision. Yeah. So subscribe if you're new to the channel. Like if you haven't liked the content just as yet. And if you want to be part of our community where I share a lot more, and I also do full moon tonight. It's actually already full moon, okay, according to the indicator, but really rightfully so. I mean, it doesn't have to be spot on, okay. Full moon generally means that there's buying pressure in the air. I'm going to discuss the full moon. I forgot about to talk about that a little bit more, but rightfully so, Mr. Rudy. And what I'm going to do now is, Legends, I just want to take a quick little break, and then I'll be back because I'm still going to be here for a while. It's only 5 o'clock, 5:06 Central European time. I'm still going to be here for a while. Okay, so I'm just going to take a quick little break, and then I'll be back. Let me just do this. I want to leave the comments here on the screen. I will go through some more comments. We can go through more scenarios. We can talk a little bit more psychology. Okay, if you have any questions, you can ask me inside of the chat. And I will be back in, just want to say, for the bullish case scenario. Okay, let's just put an invalidation there. for the nested 1-2s, invalidation. That's basically the low that you, for a nice little aggressive move to the upside, that low should not be claimed. Okay, there's that cheeky diagonal that I've spoken about, but we can cover that again when I come back. I just want to take a quick little break. Oops. Let me just get my ducks in a row. And I'll see you all in a little moment.
Don't wait for tomorrow's light. The sky is glowing here tonight. Every second softly calls, even echoes through these walls. There's a rhythm in your chest telling you this moment's blessed. You don't need a perfect sign, you don't need to read the lines. Just breathe it in and let it show. This is where you start to grow. Right here, right now, we breathe it in, not in the past or what has been. Right here, right now, this is a place where every dream begins its race. Right here, right now, stand tall.
All right. Yes, I see Andy is scalping the 1 minute time frame inside of the community at the moment. If you do not know who Andy is, maybe you're new here to the live stream. He is my partner. No, not my partner from a marriage perspective. He's the person that I work with, okay? We both do technical analysis and education here on YouTube. We have a community, the Mind Pillar community. And I see Andy is scalping the 1 minute time frame, which is not like him, but what can I say? What can I say? Andy used to scalp a lot. Okay, and he's very successful in scalping. And I see Andy is scalping the 1 minute time frame inside of the community at the moment. So, if you want to be part of the community, send me the word access. There is my Telegram, and I'll send you the instructions on how you can join the community. Right, 1 minute time frame scalping. Andy, you go, you go, you go. Right. I see today is Wacky Wednesdays. Wacky Wednesday here in South Africa, which basically means that I can get 2 burgers for the price of 1. But I'm not going to have a burger today. I already had my smoothie. Okay, so where were we? Let's take the text here out the way. You want to drag that to the upside so I have it ready for the next time. I'm still going to be here for a while, so there's still going to be breaks in between. And I want to see where price is bouncing here at the moment. Okay, I want to take a fun little scalp trade at the moment. 1-to-1 extension is getting the reaction at the moment. 1-to-1 extension is getting the reaction at the moment. Dun-dun-dun-dun. Also being, simple support and resistance. You have support above the highs. That is where price is getting the bounce at the moment. Okay, but I can be picky. I like this level. I really like this level because that is a 15-minute order block. Let me just do that properly. That, ladies and gentlemen, is a 15-minute order block. So if price gets there, I will attempt a long, but I know it can bounce here. This could be an ABC. Minimum requirement is for C to take the low of A, which it did. So there's a chance for a bounce. But now that is the area that I am interested in the long. Can it bounce there? Yes, it can definitely bounce there. 15 minute order block. Okay, so that will be the next zone where I will be looking for a bounce, but I know it can bounce from where it is at the moment. From a timing perspective, it does make sense when I take a time fib from the low to the high. You can see the low is made after the 0.618 even. The low is made. So this is the zone where price can bounce and still form a higher low and continue back up. Okay, because this could be a 1, 2, 1, 2, poof, and it gets here to the trend, that big trend that I'm keeping an eye on. Missed the short from the 0.9, but I mean, I can be picky about my trades. Just want to see where that is from a fib retracement perspective. Ching, ching. That was the 786, but there was, I like that little order block. So if that order block gets tapped, I will attempt a long. I need to check CVD. Ka-ting. Let's refresh. Oof, berry CVD. Still local berry CVD building up here. I don't like the berry CVD, and this is why I want to wait for that 15-minute order block. Okay, yes, there's a chance that it can push up from here, punch up from here, and there's a little bit of bullish CVD, but there's more. There's stronger berry CVD, especially with the Binance people here longing like crazy. Yeah. Also the aggregation, bearish. Okay, so now that I'm on CVD here at the moment, in a nutshell, how CVD works, okay, is when price forms a high, it falls and it forms a lower high. Okay, you can see the lower high. But CVD does the opposite. Okay, you can see from that pivot. Okay, let's just look at the orange line. Higher highs. It does the opposite. Lower high, higher highs. That is bearish. It means that the lowest point inside of this structure can be claimed again, which is now doing. It's now claiming the lowest point, so now that CVD is playing out. So it shows you that the market makers are absorbing retail longs in this zone. Market makers wants to push the price down, retail wants to long. So they are stopping retail out, taking their money. And this is why CVD is so powerful to me, because now you can see that that CVD has now played out, took the low. Just want to refresh and you can see it now turned into a tick. Bearish CVD played out. Okay, because I can see basically if price is falling down, making lower highs, and CVD climbs up, it does the opposite. You know that the market maker, the bears, are in control. Bullish CVD, the opposite. Price forms higher lows, and CVD does the opposite. Lower, okay, lower low, higher low. Target is the high, pushes price up. Bearish CVD. But what I like to do is I like to use bigger pivots. And this is now where the development team is busy with a crazy enhancement that I can't wait for them to launch. Okay. So what I like to do is I take that out the way. Now I am interested in what is happening between that pivot and that pivot. Is there bullish CVD between those two pivots so that the high can be claimed again, because it's a bigger trade. It's a much bigger trade. That's a trade that can make me money, cover my fees, and, you know, be a nice little winning trade like these trades over here. It's a bigger trade. So what I then do is, for those of you that don't know how to use this tool, okay, remember, if you want to use this tool, here it is. If you want to unlock all the features that the tool has to offer, you need to sign up with one of my links from an exchange perspective. Make a minimum deposit of $500 and it will unlock all the features. It's your money to trade with. You're not giving me the money. Okay, just want to make that clear. Okay, right. Your account, your money to trade with, but it unlocks all the features. Okay, so what I like to do is I switch on this annotation and it brings up this bar here. Can you guys see? It brings up this bar on the side. And there's one that looks like a ruler. The development team is enhancing it, so this button will be on top here just to make it easier. But for now, this is the way that it works. I click on that and I say, between that pivot and where price is at the moment, is there bullish CVD? No. If you don't know how to read CVD, then this can show you whether there's bullish CVD, and it shows you zero confirmations. There's nothing. Which means that price can still fall until bullish CVD starts to fall between those two pivots. So based on current price action and where CVD is at the moment, price can still take this low. And can you see why I'm not then interested in longs? Because I use CVD as confluence. Okay, I want to long in that zone. There's still no bullish CVD. Is it really going to get the bounce? Okay, remember, I don't solely depend on CVD. So if I don't see a confirmation, but I still want to take the trade, I will lower my position size, because that's my rule from a trading perspective. I can still take the trade, but I lower my position size, because I have CVD telling me that there's no strength yet, but it could still play out. So instead of going in with 2 or 3% of my capital, I can go in with 1% of, I can risk 1% of my capital. Okay, now also what I want to see is, well, is there bullish CVD forming between this pivot and where price is at the moment? Nothing. Okay, let me switch on all the lines. There's nothing. No bullish CVD. So the market is not, it's showing me that the market makers are not really interested to push price to the upside, but retail is very interested in longing. So the question is, do you trade with retail or do you trade with market makers? And this is why I love this indicator, because it shows me what market makers are doing and what retail is doing. And I would much rather trade with market makers than trade with retail. Okay, I've been using CVD for over 2 years now, if not more, a little bit over 2 years. And whenever I include an indicator as part of my trading strategy, I backtest it. Okay, and I future test it with future trades. If an indicator negatively impacts my win rate, I remove the indicator. And this is why I only have one indicator that I look at. Because I've tried RSI, I've tried, it's currently getting the bounce at inside of the 15-minute order block. So just for fun, there's no bully CVD, but just for fun, I said I'm going to take the trade when price gets into the 15-minute order block. On my 2-bit account, I'm going to take a small little long over here, but with reduced position because there's no bullish CVD. So I can still take the trade. Okay, I would prefer the 0.7 to be claimed. That would be my preference, or price needs to get back above the 0.618. So what I would like to see, or what my preference is, I would like price to SFP the 0.7 or get back above the 0.618. So I'm going to be a little bit more patient here, and if price pulls back above the 0.618, which is now doing, then I'm going to enter the trade. Let me just get my trade ready over here. Okay, so that's good enough for me. 15-minute order block. You guys can most probably not see my writing because I need to do that. Okay, 15-minute order block. It's support. I like to long support. And if I'm in a short, I like to take profits at support. So if you are in a short, this is obviously a great profit-taking area. Why else would I take profits if it's not support? If it's not support, I won't take profits from the short. But a profit-taking area also presents a longing opportunity. So this is why guys, just for fun, I'm attempting a small little long over here on my 2-bit account. If you haven't checked out 2-bit, also the link is down in the description. Second link down here, great deals on 2-bit, only using this link, and this is the pro version. It's available in more regions, and it just works better. Less slippage, more liquidity. It's a way better version of the 2-bit exchange. Is the pro version here down in the description. Okay, if you deposit $500 into the account to trade with, which is your money to trade and do whatever you want to, you're not giving me that money. It's your account, your password, your 2-factor authentication. It will also unlock the tools like CVD, and you can access the community as well. Okay, no bullish CVD yet. Right. If price pulls up a little bit further, then I will consider taking some profits to protect the community members. Know how I trade. Okay, cover fees, protect position, cover stop loss. I see something here. So this is basically the trade. Okay, it's targeting the high. I've given my stop loss a little bit of room. I will de-risk it if price moves a little bit up. And doesn't make sense for me to put my stop loss there because the risk to reward just makes no sense. So I'm going in with a little bit of a tighter stop loss. I will do a re-entry if I get stopped out. Okay, but there's a chance for a completed structure here, A, B, C, W, X, Y, however you want to count it, but a three-wave structure. There's a chance for a bounce here. Price is at support. And I think the bulls are going to most likely want to defend this level, because if this is going to turn to a 1, 2, 1, 2, the bulls needs to defend this low. So this is a good bouncing zone to defend that low. So I'm giving the bulls the benefit of the doubt. Okay. Ideally, what I could do is move my stop loss to the 0.9 because it's a very rare target for a second wave and it still makes the risk to reward worth it. Okay. $40 in profit at the moment. I don't want to de-risk the position just as yet. I have not covered my fees just as yet. How can you cover fees so fast? I haven't covered my fees yet. I'm giving my stop loss a little bit of room to breathe. I haven't covered fees just as yet. Okay. So Devil, do you ever use moving averages for confluence? No. I do use the VWAP for profit taking areas. Mr. VWAP over here. So people often ask me when I enter a long or a short, for example, where is your first profit taking area? And it's usually at the VWAP. So if the VWAP continues here, price moves up, that becomes a TP1 for me. If you don't know where to take profits, the VWAP is a great guideline in terms of where to take profits. So I use the VWAP from a scalping perspective to tell me where my TP1 is most likely to get hit. Okay, I don't need the VWAP, but it's an easy way for me to explain to new traders that if you can't work out resistance, if you're in a long, from a price action perspective, use the VWAP as a TP1. It's always a great TP1 and it gets hit most of the times. So it's a great TP1 zone. So that's the only moving average that I use. I do not use any other moving averages from a confluence perspective. I did try it when I started out in my trading career. I tried moving averages. It's not my cup of tea. I'm not saying it doesn't work. It's not my cup of tea. I've never had success with moving averages. It's too confusing for me. And this is why I gravitated towards trading strategies that make sense for me. Swing failure patterns, the D-line strategy, which I think is way easier than moving averages. Range high, range low, Elliott wave theory. Okay. It's very seldom that I trade Elliott waves. I do sometimes, but I mostly use Elliott wave theory as confluence to execute an existing trading strategy that I've mastered. Hope that makes sense. Okay. So in the most bullish case scenario, let me take Mr. VWAP out the way here. VWAP, you can search its, okay, volume weighted average price. You can go search for that under the indicator tab. And then here's my settings. If you want to copy, take a screenshot and copy my settings. Okay. So from a scalping perspective, I love the VWAP as a TP1, always a TP1 for me. Okay. Right. So in the most bullish case scenario, 112, we've spoken about it. 1 2 1 2 3 4 5 4 5. That could be a wave 1. Complex corrective structure in a wave 2. Okay, this could now be another 1, which is actually great for a 112 because this leg is shorter than this leg. this leg is shorter. Now that's what I love to see in nested 1-2s, is that this, after the big 1-2, the next 1-2 is becoming smaller. Now in nested 1-2s, that's preferably what you want to see. So this is why I'm giving the scenario probabilities. There's a high chance for the scenario to play out because it's looking attractive. Okay. Correction in 2, this could be a 1-2. Now, after a nested 1-2, it can form another 1-2. I don't know how many 1-2s it's going to form, but basically what you're looking for is you're waiting for a pop. 3, 4, 5, 4, 5. You have to see the same mess to the upside that happened here. And you want to see the guard candle in the middle with high volume. And then as the new highs gets made, as that high and that high gets made, you want to see volume decrease. And then that becomes a shorting opportunity. Because bare minimum, the structure corrects itself, it retests, that's your short. And then that becomes a longing opportunity again because you have a 5-wave move to the upside. So I know a lot of people don't like Elliott wave theory because it's so complex, but it's the only predictive tool that we have. It's the only predictive tool that exists inside of the market. So sometimes there's a lot of scenarios, but it gives you an idea of how the market can move in the future. And based on how the market moves, I can then look at the structure and say, oh crap, that's a 3-wave structure, I'm looking for shorts. Or oh crap, that's a 5-wave structure, I'm looking for longs. So often I don't have to know which structure is going to play out. I have to just sit and wait to see the structure when it's finished. Then I know what trading decision to make. Because after a certain structure, I know that it increases probabilities for a long or a short. Right. Let's see. Price gets the bounce here to the upside. Still, the bounce is still not big enough for me to cover my stock. Let me just see if I have enough to cover my fees and still have enough running. I might have to. Okay, can you guys see this? Right, so let's do this. Okay, you need to make it a little bit bigger. Right, that's where I entered. Price got a back above the 0.618. That's what I wanted to see. I've given my stop loss a little bit of room, but now that price is pushing to the upside, I can now de-risk my position, which means I'm going to lose $85 with this trade. I'm already 103, 106, 131 in profit. My fees are wait, where's my fees? It's $18. My fees are $18. So I can take enough profits to cover my fees and a little bit of my fees. Okay, price is now pulled back. So I like to take a little bit. 25. Let's do 25. Okay. So I've covered most of my fees. If price pushes a little bit up, I'm just showing you guys generally this is how I trade. Okay. I have enough to cover fees, I cover my fees. I have enough to cover my stop loss. And this is usually why I use most of my position just to de-risk the position so that it turns into a free trade. And then I let the rest go. So often what happens to me is I don't make a lot of hundreds of thousands of dollars to the up or to the downside because I use a lot of my position size to not give the market my money. That's what it boils down to. And that's my style of trading. Okay. Right. I want to see something else here. We broke the trend line from the lows. Your thoughts, Dewald? We broke the trend line from the lows. Oh, the D-line strategy. Are you talking about this local structure, this? Yeah. The price is at support, so for me it's still a valid long. Okay. Yeah, that is also, that's the shorting opportunity, right? Which I missed. Now, if price formed a lower high there, I would have considered this short, and I'll explain why. Can it fall down? Yes, but that's the shorting opportunity. You wait for the breakdown, stop goes above the high, you're targeting the lows. Okay, that's the trade that you're basically referring to now. The reason I don't like it, yes, it can still continue to the downside, but the reason I most probably would not have taken it, maybe go in with a little bit less, is because of how deep this retracement went. So what I like to see is an impulsive structure down and a price that does not tap the 0.9 fib. When I take a fib from the high to the low, that retracement tapped the 0.9, which is a rare target for a wave 2. So basically I'm looking at this as a 1, I'm looking at that as a 2, and I want a 3 to the downside to make the trade worth it. Now that's a rare target. So if I did attempt the short, I would have gone in with less capital unless price turned around over there. Then the breakout for me becomes more interesting, or the breakdown. So I'm just sharing with you how I typically would have approached this trade. So I do combine my trading strategy with Elliott wave theory to determine probabilities and whether I should or should not take the trade. So can it break down? Yes, it can break down, okay, but I trade probabilities. So if it breaks down and a low probability scenario plays out, great, I'll look for a long further down. Because I am looking for a long. I'm already positioned in the short. So it suits me that it breaks down because I'm making money from my short, okay, the short that I'm in over here. I want price to break down so I can make money from the short. But then I'm going to be looking for a long. This is not really a short that I would have taken unless I went in with less capital because of that. Because I know that there's a higher probability because the retracement went so deep, tapping the 0.9, almost claiming the high, that there's a higher chance that it's a corrective structure. Again, probabilities. There's a higher chance that this is a corrective structure than a breakdown. Can the breakdown happen? Yes, it can. Okay, please guys, it can happen. But I trade probabilities. And when that happens, I'm happy to miss the trade. But because that retracement was so deep, there's a chance for a bounce in the zone. Even if it sweeps the lows again, there's still a chance for a bounce in the zone. Although it's lost the trend. I know it's lost the trend, so based on the D-line strategy, it's a valid short. But I combine my trading strategies with Elliott wave theory, and then I can choose whether I want to take the trade or not. So if I did take the trade, I would have most probably lowered my position size because of how deep the retracement went. Yes, the official rule for Elliott wave theory says that it can be a 1 and a 2 because 2 is just not allowed to take the high. It can even retrace 99% of wave 1 and still be a valid wave 2. But then when you consider probabilities, how many times does it happen? Okay, maybe it happens once every 20 times inside of structures. I'm not going to bet my money on the 1 time in 20 times that it happens, or the 2 times out of 20 that it happens. I would rather bet on the probability that, well, 18 or 17 out of 20 times, it's a corrective structure. So I'm not going to take the trade. So you still have that 10% chance that it is going to be a wave 2. And then I can just take the next trade. Okay. I just want to see if I still have some levels. Now this is another long that I will also consider. Okay, this is another long that I will consider. Let's just take some of the noise here out. Okay, it looks like I'm going to get stopped out of this trade, but my stop loss is a little bit further down. There's a cheeky little diagonal here. There's a cheeky little diagonal. Where this is the low that should not be claimed. 1, 2, 3, 4, 5. There's a cheeky little diagonal in here, which means that this structure can form a larger structure, claim the liquidity below the lows, where I'll be looking at this naked point of control for an SFP. So now that for me is also an interesting long. Okay, because remember, 5-wave structures, when they correct, they always lose the trend. The question is price going to form a higher low and take the high again? Right? Let me do an example over here. In a bullish case scenario with a 5-wave impulse to the upside, bang. Okay, there's your 5-wave impulse to the upside. Let me do that. Let me do that. Make it nice. It has to correct itself before it continues. And then what the structure does, it does this. So when you have the D-line strategy, okay, you could say, let me just get it a little bit better. Okay, let me get it a little bit better. Okay. In a 5-wave impulse up, price bounces on the trend, it creates the trend, and it loses the trend. Comes back for a retest, it falls, it creates a higher low, and it continues. So the 5-wave structure always loses the trend. You just never know where the higher low is going to form, or whether this is a C wave, because a C wave can also be a 5-wave structure and then it takes the low. That's what I'm basically trying to demonstrate, is that although the trend has been lost, okay, although the trend has been lost, price can still form a higher low, because this could be the end of a 1, 2, 3, 4, 5. That can be your 5-wave structure here to the upside. It's busy with a correction. It forms a higher low and then it continues. So yes, it does provide a shorting opportunity, but I don't like to short or to long a 5-wave structure from a D-line perspective. I like to see 3-wave structures. Love to see 3-wave structures. And that's just a little bit of education on how I've enhanced my D-line strategy over the years by combining it with Elliott wave theory. Okay, did I get stopped out of my trade? I did. I got stopped out. I should have left my stop loss there because I think it can still bounce here. Okay. Anyways, that was a fun little trade. Still a chance for a bounce in the zone. It's still at support. It's holding the support. I want to see CVD. Just grab this back here to the downside. I want to see if I have any confirmations now at the moment. Now there is bullish CVD forming. Finally. Finally there is some bullish CVD forming. All the bearish CVD has played out, and now there's bullish CVD forming. Question mark. One confirmation only. I have 5 lines and there's only one confirmation, which means only one line is giving me confirmation. But that's what I wanted to see for a sign of strength. Now there's some bullish CVD building up. Okay, that's why I should have given my stop loss a little bit of room there. I'm a very defensive trader. Very defensive. That's just how I like to roll. Okay. Remember, if you want to be part of our community, send me the word access to my Telegram and I'll send you the instructions on how to join. If you want this tool that I use, okay, to determine bullish and bearish CVD, to see how market makers and retail trade against each other. Market makers always win. Okay, it's this link here down in the description. Follow the instructions and one of the requirements is you need to sign up with one of the affiliate exchanges. Links down in the description. Make a minimum deposit of $500 and it will unlock all the features. And then, right, that is basically how you get access to CVD. This is just one tool here. CVD, I'm always on CVD. It's the one that I always have open when I'm trading. I'm looking for strength and weakness. I want to see what market makers are doing. What is retail doing? Okay. The one that we're all going to watch here together tonight. Fed interest rate decision. Fed press conference. Which is in 6, 7, 8, 2 hours. 2 hours and 2 minutes from now. 2 hours and 10 minutes from now. Right, remember to smash up that like button. And price might just get the bounce where it is right now. If this is a diagonal in a 5-wave move up, the low is still a little bit soon. Can you see? If this is the impulse, the low is still a little bit soon. In a double 1-2, it's perfectly fine. That can be the low in the double 1-2. But I have to highlight that in contracting diagonals, I have seen that the lows are made before the minimum requirement. I have seen that before, especially in diagonals. Okay, let me go through some comments. Wow, that's a great comparison of the D-line and Elliott wave. I was confused about it, so thanks for explanation. Absolute pleasure, man. It's just, I suppose, experience at the end of the day. You know, someone can tell you how to drive a car, and then when you start driving the car, the experience is what makes you a better driver over years and years and years. And this is just based on experience. S&P dumping, how we are going to go up. Because it might reverse. I don't know. I trade the chart in front of me. I don't look at other things and then make a trading decision on Bitcoin. I trade the chart in front of me. Price is at support. Price is at support. There's a potential for a bounce. Okay. And I was just looking for a scalp, guys. I'm just looking for a scalp. Right? That was the trade that I was looking for. Do I still have it here? No, not that one. Here we go. I'm just looking for a scalp. That's what I'm looking for. Okay. Remember, nothing just dumps in a straight line. It bounces. It dumps, bounce, dumps, bounce, dumps, bounce. And those little bounces can give me the trade here on Bitcoin that I need. But I don't need to analyze another chart to trade Bitcoin. I trade the chart in front of me. But the next long, if price is going to take that low, this is the long that I'm interested in. Most bullish case scenario, 1, 2, 1, 2, and it flies. So it's still an interesting long in this zone because that's the most bullish case scenario for price to absolutely fly to the upside. Double 1-2s. And this is support. Okay. If price takes the low, then I have to consider a diagonal. 1, 2, 3, 4, 5. This is why I have the lines. This could be a larger correction and then it gets the bounce back to the upside. But that then means that the most bullish case scenario has been invalidated and the bounce to the upside could be not as aggressive as people would like it to be. Because then this becomes your wave 1, that becomes your wave 2, and it goes up in a 3, 4, 5, and it's done, and it starts correcting. Nested 1-2s are always more bullish because nested 1-2s, it's building up a spring. Okay, nested 1-2s is building up a spring. It builds up a spring and then it pops to the upside and then it repeats this structure again to the upside. So it goes higher. It usually goes much higher. It smashes the 1.618, okay, like a hot knife through butter. Hey bro, the knowledge you share on your stream is really valuable. I'm a video editor and thumbnail designer, and I think better edits and thumbnails could help push your content to a bigger audience. Mr. Jen, I appreciate the offer, man, but I really enjoy doing my own thumbnails because trading is so technical. The thumbnails allow me to be more creative. But if I do need someone, okay, I will definitely reach out, right? But I do enjoy making and creating my own thumbnails and editing my own videos. Love you, sir. Absolute pleasure, man. Love you too. We have a daily at 63,720. Go check that. Yeah, let me just make sure that I have all my levels marked out. Yeah. Oof. Yeah. That would be an interesting SFP if price gets there, right? It's losing the support at the moment. It's losing it. It's losing that support. I just want to see where that daily level is at. Very close to the 0.9. Let's do this. Yeah, 0.8. Not a great. Not an invalidation for 112, but a very deep retracement, I must say. Okay. Usually, most often, when price hits the 0.88, not always, most often, is it takes the low. Just want to put that out there. Or not, maybe not this low, but it takes the low. Okay, it takes the low. That's what I see happen most often when you backtest the 0.88. Yes, it can still be a 1, 2, because 2 can retrace 99% of wave 1. So it can literally almost take the low, almost, and still get a bounce and claim the highs. It can do that. It's just not what happens most often. Okay, currently still at the 0.7, but it looks like it's lost that support. Unless it can get back above. Dare I even go into the 1 minute time frame to see what is happening over here? Dare I go in here? I would say easiest way to trade this, guys, and this is scalping, right? I would wait for, I just want to see something. There's so much noise in the 1 minute time frame. Yeah, I would wait for that to break. Sure, not an easy one. You see, there's so much noise in the 1 minute time frame. You don't get clean trends at times. So you could say, right, I'm looking for the long but I'm not going to do anything until the trend breaks. So if it wants to fall, let it fall. So you stay out of the trade. That protects. That's the benefit of the D-line strategy. It protects you from the trade. Okay, and when it breaks, you know, okay, now there's a chance for a reversal back to the upside. But now you have a bigger stop loss, and that's the con about the D-line strategy. Every strategy has advantages and disadvantages. Every strategy. There's no perfect trading strategy. The D-line strategy is a more patient strategy. It gives you more time to plan the trade, but it has a bigger stop loss. SFPs are very quick, but they are very quick and some people miss them, or they enter way too late for SFP trades. But they have tiny stop losses, but they require a lot of screen time and you have to be fast. There's a pro and con to each trading strategy. Okay, I don't want to mess around here on the 1 minute time frame. Okay, just going to keep it simple. Waiting for momentum to shift. It did SFP that low. There's a chance. I think that nested one too still has a chance. Okay, it SFP'd that low over there. So let's see if that holds. Right, I think this daily got tapped. Did the daily get tapped? No. Wait, how? I think this daily got tapped. Oh, the 1 year. Let me go check. Maybe I left it in there for back testing. Oh yeah, that daily did get tapped. You're right. That daily level got tapped today. SFP today. So the reason I'm leaving it there is because it can backtest the daily and still get the bounce. This candle is not closed, so that for me is still a valid daily. It SFP'd the daily this morning, so it's still valid for me at least. Okay, still valid, so it can still back, and this is why I'm leaving it. I like to leave it for at least a day or two. Test, 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 bounce. It can test it again and bounce. I do like this naked point of control because from a liquidity perspective, and I like the liquidity below these lows. So it would be nice for price to do that and then get back above. But then I'll be looking for that long instead of here so that I have a smaller stop loss. Look at that. Perfect alignment with the 0.618. Now I like that. Very much. I like that. Yeah, there's a chance. There's a chance. Maybe a scalpy scalp. We'll see. Guys, I'm not going heavy with these trades. That little trade that I took on 2-bit, how much did I lose? Maybe not even $100. Okay, it's not going crazy with these little scalp trades. I'm really looking for a bigger trade. Let's check here. Just gonna want to go into check how much did I lose. $87. $87.48. Not going crazy with these trades. Okay, price. This is now where price is reacting. Can you see where price is reacting at the moment? Come on, disappear there. 0.382. That's where price is reacting at the moment. Next level 0.5. Next level 0.6. Maximum. One thing, I mean, there's always one thing, right? I keep on saying one thing. What I have noticed, if this is going to be a bullish structure in a contracting diagonal, okay, let me just get that. If this is a contracting diagonal in a 1, 2, 3, 4, 5, very cheeky, I must say, very short 4, very short 5. The corrections can get very deep and nasty. I have seen that. It can get, and price forms a higher low. It looks like it wants to smack down and it bounces back up. Okay, it is common to see that inside of contracting diagonals. A sharp, aggressive correction that looks like it's just going to continue and it doesn't, and it turns around and it V-shapes back to the upside. Looks like the most unlikely scenario is playing out. Which one? Alex, is it necessary to take into account the steepness of the stock market line's slope with CVD, especially when there's a reversal in the opposite direction with sharper angles? Yeah. You basically mean like if you're looking for bullish CVD and there's a massive drop in CVD, does that determine that the bounce is going to be more aggressive? Not always. Not always. It can be very slight and price can still do significant things. So no, Alex, I don't really take the steepness of how aggressive the bullish or bearish CVD is into consideration. I still take profits where I'm supposed to take profits, because as soon as the high or low is claimed that CVD played out, it doesn't matter how aggressive it is. What percentage of position do you usually close to cover fees? It's not a percentage. If I have enough, I cover it. I get this question a lot. Okay, I think people want to, and there's nothing wrong with it. You want to be so technical that you want to know exactly, I need to take 26.3% of when this. No, I don't trade like that, guys. When I enter a trade, I can see how much I'm making. Okay, the realized P&L will be in red because you've just paid fees to open up the trade. There will be a minus figure there. When you just enter a trade, there will. Okay, like this trade cost me $1,165 to open and close. That's the combined cost. Okay, so it's almost what, 600 or 500, let's say $550 to open this trade in one direction. $1,165 in both directions. Basically, that's the trading fee for this entire position. When I have enough, as soon as price starts moving in my favor and I have enough to cover the fees, I do it. And it's as simple as, if my fees is $1,000 and my trade is $2,000 in profit, I can take 50% and cover my fees. That's how simple it is for me. Do I have enough money to cover the fees and have a big enough position open to still run? It doesn't make sense for me to have $1,000 fee to open up a trade, or $100 fee to open up a trade, but I'm $100 in profit. It means I have to close my entire position just to cover the fees. Then it's not worth taking any, unless you just want to take a partial just to de-risk the position. That's up to you as a trader. Okay, so for me, and I'm not saying it's wrong or right, guys, but it's kept me profitable. Okay, my portfolios for the month of July is nicely in profits. I'm happy about the profits that I've made. Okay, my total P&L for the month of July, win rate 85.7, 14 trades, lost 2, 112. That's what I lost. That's what I made. Well, that's my best trade. That's my worst trade for the month of July so far. It's not always this good. Okay, sometimes my P&L is a little bit higher, but I also take a lot more losses. But my losses are always tiny compared to my wins. But I'm just sharing with you how I trade the markets. Okay, there might be a different style or percentage or something that's better for you, and then you implement that as part of your trading plan. But for me, it's as simple as, do I have enough? Because this P&L moves as price moves in your favor. Do I have enough to cover the fees and still have a position open? Yes, I take some. If I have a stop loss that I have not protected yet, for example, oh, that's a TP. If now I have a stop loss, guys, and these are golden nuggets of education that you're not going to get anywhere else, right? So if my stop loss was still here above the highs and I have a $484 stop loss, I only have enough money to cover the fees and to still have a position to run, then I'm not going to cover the stop loss. Price falls a little bit further, then I'll start taking money to cover the stop loss. Price falls a little bit further, I can de-risk the position. I spend a lot of money on this trade just de-risking this position, but still have enough open to run to the downside. And I basically look at what I have. How much profits do I have? How much do I still need to cover? How far is my stop loss? There's no percentage for me. It's not, there's no rule that says I have to take so much from a percentage perspective. It's as simple as, and this is why I love Bluffin and the exchanges that I trade on. It shows me exactly how much is your trading fees, because when you open the trade, that will be in red. Okay, have you seen? When you open a trade, there will be a minus figure. Minus $1, minus $10, minus whatever. That's the trading fee that you're paying just to open up that trade. So if it's $5 and you are $20 in profits, it means you can take some to cover the fees and you still have a position running. So I look at the amounts. It's as simple as that. There's no mathematical equation that a magic, no. I just look at the numbers. That's how I trade. And it's kept me profitable. Right. Legends, Andy is spending his day inside of the community today. Looks like he's scalping the 1 minute time frame. He did also enter an interesting short that is profitable at the moment. And if you want to be part of the community, because when I'm not on YouTube, I'm inside of the community, send me the word access. There's my Telegram. I'll send you the instructions on how you can join. If you want access to CVD, the economic calendar, footprint that Andy has discussed. Do you guys remember this? Yesterday in his live stream, Andy loves footprint as well. Okay, I'm learning to use it now. I've never used it. I'll be honest, guys. I don't know how to use this. I'm learning from Andy now. Okay, Andy's teaching me how to use this. And from what I've seen on how he enters trades, he has great success with footprint. Because it's also real time, if I'm not mistaken. In real time, it shows you shorts and longs. Very similar to CVD. Okay. If you want access to these tools, and this is what myself and Andy use from a day trading perspective, there's the link. Okay. That will be a cheeky little bounce here to the upside. Cheeky little bounce. Cheeky, cheeky, cheeky. It is back above the 0.382. Is there bullish CVD locally? Price is still forming berry CVD with every bounce. So not gonna take this trade. Right, guys, I still wanted to discuss the moon indicator. Let's go to the 4-hour time frame. Let's clean up the kitchen. You can take that out the way. Don't need that. And switch on this little bad boy over here. So let's just zoom out here a little bit, just to show everyone how it works. The moon indicator, in case you did not know, is linked to the moon in the sky, the actual moon in the sky. The purple moons are new moons. Basically, you don't see the moon in the sky because the shadow of the earth is covering the moon. And the green moons is full moon. Okay? Usually the theory behind it is when there's a bull moon, it impacts the buying behavior of people on earth. So I know, guys, this sounds taboo, but it's 74% accurate. So there must be something to it. Okay? So basically what happens is when there's a green moon, it tends to push price to the upside. When there's a new moon, it tends to push price to the downside. Like I said, it's 74% accurate, and sometimes a moon gets invalidated, where you're expecting buying pressure and the price falls, or you're expecting selling pressure and the price pumps. Okay, but it's 74% accurate, which is great for an accuracy of an indicator. So when you look at all the moons that is played out, let's say since the top of the bear, when price made the tippy top over here, a bull moon in a bear market can consolidate a price or push it to the upside. Because in a bear market, the new moon takes priority. In a bull market, the bull moon, which is the green moon, takes priority. I've just color coded mine to show upwards and downwards momentum. So here, price consolidated and fell to the downside. So it invalidated that bull moon, but it still gave a little bit of a consolidation. But the new moon pushed price down because it takes priority in the bear market. Bull moon, up. Okay, then it fell to the downside. Bear moon, down. Bull moon, sideways consolidation. Remember, the bull moon in a bear market can consolidate price or push it up. Just down, up, down, okay, and then consolidation. But then you could say that this bull moon actually got invalidated, got a consolidation and just smacked to the downside. Bear moon down, bull moon up, bear moon down. So you can see most of the time they play out. Sometimes they do that. Sometimes. But there's no perfect indicator. When I find an indicator that's more than 70% accurate, that's something that I really pay attention to. Okay, so most of the time they play out. Look at this, bull moon. Push price up, bear moon, consolidation. Bull moon, push price up, bear moon, push price to the downside. Okay, this one got smacked hard. This bull moon got smacked hard. But you'll see in a bear market, it's usually the bull moons that will get smacked if there's an invalidation. Bear moon down, bull moon up. So far so good. 1 invalidation, 2 invalidations. There's 3 invalidations so far, but there's been plenty of bull and bear moons just to show everyone how powerful they are. So now the question, look at what is happening right now. Bull moon pushed price up. Bear moon created the consolidation area. Now there's a fresh bull moon that is just printed. So based on probabilities, there's a higher chance for a either chop sideways, then bear moon prints and down, or up. Just based on probabilities. Yes, that can happen. But it doesn't happen often. So, and this is why some of the people inside of the comment section said, "Dear old bull moon today," because it's something to take into consideration, is that it is more interesting to look for longs when a bull moon prints. Beautiful longs here to the upside. When a bear moon prints, it's better to look for shorts, because price literally just consolidated sideways. It didn't move up, it didn't fall down, it literally just created sideways. But now there's a bull moon, so it does become more interesting to look for longs again. Can it do this? Yes, can do that. Okay, but if you go and back test it yourself, you can go work out the probabilities of how many times a bear and a bull moon gets invalidated. So it's just interesting to keep in mind that there is a bull moon in the sky, which means that there could be buying pressure, which does make looking for longs more interesting. Okay, just quickly wanted to point that out. Wave 2 should be zigzag family structure in diagonal. It can be a flat, although it's rare, but it can be a flat, which is now, it's a flat. So yeah, on the 15-minute time frame, in this diagonal that I've just discussed, most common corrective structure in a diagonal, 1, 2, 3, 4, 5. Most common is a zigzag, sharp zigzag that almost looks like it wants to take out the low. That plays out most often after a diagonal. A flat is rare. A, B, 0.9, C to the downside. It's rare, but it's allowed. I've actually seen them happen on crypto a lot. So when they say it's rare, I think the educational content like Robert Prechter and those type of people that speaks about the probabilities of scenarios, they're referring to stock markets because they haven't traded crypto. And often what I've seen, some, not always, not all of them, some of the scenarios where they classify it as rare, I see actually as common inside of crypto. So it would be interesting to apply those principles to crypto and update the probabilities according to what happens on Bitcoin. Because Bitcoin is not is not the Nasdaq, it's not the S&P 500 on where all the backtesting happened when probabilities were determined. One of the scenarios, one of the probabilities I, for example, changed for myself is in Elliott wave theory. They will teach you that most often the fourth wave is the longest from a corrective perspective. You get your 1, 2, 3, 4, 5 in your wave 1. You get a sharp correction in a wave 2. You get your explosive third wave. And then you get your long, confusing correction in your wave 4. And often you want to see a long fourth wave. Then a little 5 to the upside to go and eat the highs. What I have seen in crypto most often is this. Tiny little fourth waves. I've seen that many times. You're expecting a long fourth wave. It takes the high, very easy, very fast, and the 5-wave structure is done. I've seen this many times in crypto, for example. What I've also seen in crypto is this. When you take a trend-based fib, let me just do that. I have seen this often as well. A C wave hitting the 2.618 extension, the 2 extension, and the 1.618. It's almost like this is a common target in crypto for a C wave. Where in Elliott wave theory, it's said that that's your most common C wave target. But in crypto, it seems that that is your most common targets. Very sharp, very aggressive. Even hitting the 2, and I've even seen a C wave hit the 3 extension and the 4 extension on one occasion. I've only seen one 4.618 hit on a C wave. So some of the rules I take with a grain of salt based on what I'm seeing when I trade on a daily basis. Okay, Berry CVD has now disappeared. Now it looks like the bulls might have a chance for a little bounce here to the upside. Okay, remember to smash up that like button if you do enjoy the educational content. Hope you guys are all still enjoying the stream. I literally feel like I'm just talking to myself. Okay, share some love. And smash up that like button. There's a chance for a little bit of a bouncy here to the upside. It's still holding that 0. It's basically still holding the support. It's still holding the support. Can you see it's holding the support? And it's most probably breaking that little trend that I had there on the smaller time frames that I deleted. There we go. Yeah, it's breaking the trend. I should have set an alarm. Damn, I should have set an alarm. I didn't set an alarm on the trend. Should have set an alarm. Because I wanted to play that breakout. Right, let me go through some more comments, just chatty chat. I'm still going to be here for a while, legends, okay? And, oh yes, Devil showing us moon phases, let's go. Next new moon is also eclipse. Well, that's going to be interesting. We'll see what that's going to do to the market. So maybe it will be a false new moon, we'll see. I'm back. What did I miss? Is everyone safe in today's market? Took a short from 64,500. Okay, that nice little short. Just a quick scalp down. Won't overdo with FOMO. Love the moons. Yes, the moons are great. For me, the reason I use the moons is from an investment perspective. So I have some spot bags, for example, where I add every month. I buy a little bit of Bitcoin every month. But then the question is, when in the month makes a big difference to your average entry over time? So I have done back testing, and I've actually made a video about it. I've done back testing that if you are a person that buys a little bit of Bitcoin every single month, or S&P 500 or NASDAQ, it doesn't matter, any stock market, okay? If you buy when it's full moon in the sky, you get the best entry for that month. Because usually price is at its lowest point when the full moon is in the sky, because then you buy the upwards momentum again. And over time, if you do this for months and months and months and years and years and years, and you have a long-term portfolio where you buy a little bit every month, you are buying at the best place every month. And I've back tested it. It makes a big difference over the long term in terms of your portfolio. So a lot of people will say, well, I get paid, I buy. But when you buy makes a big difference in that same month. And I've back tested it. It makes a big difference. I've made a video about it. And I've done the calculations. You'll see it makes a big difference. Okay. Remember, I'm not a financial advisor. I'm sharing with you what I do from an educational and entertainment perspective. Okay, you do your own research, you go and back test it yourself. Don't just, okay, do what I do. But that's what I can share with you what I do. I do that. I buy every month when there's a full moon in the sky. Like today, I buy. But it's a long-term portfolio. It's a 10-year portfolio. It's a 15, 20-year portfolio. I just want to find the best times to add to that portfolio during the month. Why are the party poopers back here now? Berry CBD. Can you guys see between that pivot and this pivot, there's Berry CBD, question mark, 2 confirmations. Not a great sign of strength. Can it continue? Obviously, guys. Yes, it can always continue. Okay, but usually when I am playing along and I see Berry CVD, I lower my position size. That's just usually what I do. Okay, it's not to say that I don't have to take the trade. I can still take the trade because CVD can get invalidated. I've seen it happen many times. CVD gets invalidated. It looks bearish, and then it pops. Trade plays out. You're like, shit, based on CVD, I didn't take the trade. No, I still take the trades. I just lower position size. If you want access to the CVD, it's the link down here. Okay. CVD has got many things, guys. I know someone asked me to go through everything on here, but just briefly, it's got, let me do this. I'm not going to spend a lot of time. 2 minutes. Okay, it's got heat map, which basically gives you an overall view of the market. Percentage moves. It's got bubbles, which is one of my favorites. Okay, shows you the top 100, 7 days. You can play around with the filters. Okay, biggest movers, biggest losers, biggest winners, biggest losers for the day. It's got calculators for calculating your risk, liquidation prices, if you want to do that. Okay, it has breaking news. If you want to stay on top of the breaking news that is happening across the crypto space, you can filter it according to coins. Okay, I like to leave it on all, and you can go and read the news. Then it's got the economic calendar, which basically shows you when the high impact news is going to be, and it always defaults to high. It has a dark mode, and it defaults to US. You can go and include more news events if you want. Okay, I've just asked the team to do it this way because this is the only news that me and myself and Andy use from a day trading perspective. So just to make it easy, just default to the stuff that we need. Okay, so you don't have to go and click and save and all that type of things. Then you've got CVD, which I've just shown. Footprint chart, which Andy is very passionate about. Okay, fear and greed. Still in the fear territory. Then you've got the analytics section, drawdown from all-time high. Andy loves to show this as well. Matt also speaks about this. Okay, macroeconomist loves to look at this data. What is the drawdown for this bear market so far? Can it still punch a little bit lower? Terminal price. I actually don't know what this is. There's some things that sometimes Matt uses things that I don't use, and sometimes I use things that Matt don't use, but everything that we all use is in here. I need to go and figure out what this terminal price is. Okay, liquidation heat map, liquidation map, liquidation heat map. Also, I don't know if you know, but even on CVD you can switch on liquidity. Okay, you can see where liquidity is. Even on CVD, where is the liquidity? Right, it's an amazing tool. It's the tool that myself and Andy use because we used to have different tools for different things. Now you have to have 10 tabs open to look at liquidations, to look at CVD, maybe the fear and greed. You have to have all of these tabs open. So what we asked the development team to do is to say, give us everything that we need and put it under one roof. I want to see everything that I need from a day trading perspective. Plus the CVD that I'm using, make it better. Make it better. Make it the way that I want it to use. I want liquidity in there. I want the divergences in there. Okay, I want to be able to draw my divergences as well, which they're busy developing. I want to be able to set alarms, for example. So I can, for example, this is one of the enhancements that's coming very soon. I want to be for example, I want to say that between that pivot and where price is now, as soon as bullish CVD forms, as soon as there's bullish CVD forming, send me an alert. So that I don't have to stare at the chart the whole time. Send me a SMS or an email or something. Okay, send me an alert. Or make a Musa sound on my PC so that I know bullish CVD, go pay attention. Okay, that is coming. That is coming. The development team is busy enhancing that. So there's a lot of cool stuff here on this tool. And here it is. You will be able to use some of the features for free. But if you want to unlock all the features and all the timelines, okay, you need to sign up with one of my affiliates partners where you get the best deals that these exchanges has to offer in any event. Okay, make a minimum deposit of $500, which is your money to trade with, and it will unlock everything. And after you've done that, you will also get access to the community. So up to you. Okay. Ooh. Glad I didn't take that trade. That berry CVD is pushing price down. Right, legends. So overall, I am not interested in shorts because I'm already positioned in a short. If price wants to fall down, let it fall. Okay, I will go and do a run through all the scenarios again so we can see where we stand. Let me just put myself back here. Right, there we go. But what I want to do is I want to take a little bit of a break. Ooh, it looks like my brother just sent me a new song that he made for the channel. So I'm going to go and give that a listen. Stretch my legs, take a bathroom break, grab something to eat, and I will see you guys back here in... Where's my little text box? Okay, I'm still going to be here for a while. I mean, we're going to do the Fed press conference together. So I'm still going to be here for a while, but I think I'm going to give myself a little bit of a longer break here because I want to grab something to eat. I'm going to give myself 8 minutes. Okay, doesn't look as bad as 10 minutes. I'm going to give myself 8 minutes over here. Right, I will see you all back in 8 minutes. Remember to smash up that like button, share the love, chat amongst yourself in the comments section, and see you just now.
There's something moving underneath the silence. You can't stop it, you can't see it.
There's a spark you can't control. No face, no throne, no single soul. No crown, no king, no guarded gate. Just coded rhythm, rewriting fate. They don't trust what they can't hold. They fear what they can't control. But every system once began as something small no one would stand. They laughed at fire when it was stone. Now whole cities glow from what was thrown. Every empire starts unseen. Every future starts a dream.
It's rising, it's breathing through the cracks in the ceiling.
You can doubt it, you can fight it,
but you won't stop the feeling. There's an invisible fire burning under the ground. You can't cage the wire, you can't shut it down. We are rising higher, no walls around. What you can't see now will shake this town. It's burning brighter. No turning back now.
yeah. It don't knock, it flows through cracks. Built by hands that turn their backs. No permission, no applause. No signature from broken laws. They building towers made of glass. I'm building shadows built to last. They measure worth in what they see. I measure mine in legacy. Call it risky, call it strange. Every revolution looks that way. What they mock today is small. Tomorrow stands 10 stories tall.
It's growing, it's glowing, even when you don't know it.
It's silent,
But violent, and nothing can control it. There's an invisible fire burning through the sound. You can doubt desire, but you can't drown the ground. We are climbing higher, feet off the ground. What you can't see now will turn this world around.
I've been doubted, I've been tested. Watch belief get dissected. Watch fear spread contagious fast. But truth don't break it out last. When pressure don't erase the flame, it only teaches it to aim. And when the dark feels permanent,
That's when the spark turns permanent. There's an invisible fire burning us now. You can't pull the wire, you can't shut it down. We are rising higher, we won't bow. What you can't see now will own this ground. Don't wait for tomorrow's light. The sky is glowing here tonight. Every second softly calls, even echoes through these walls. There's a rhythm in your chest telling you this moment's blessed. You don't need a perfect sign, you don't need to read the lines. Just breathe it in and let it show. This is where you start to grow. You don't need to understand it all. Just keep moving when you fall. Every shadow fades with time. Every mountain starts to climb. There's a spark beneath your skin. That's where all new roads begin. Feel the pulse beneath your feet. Hear the quiet in the beat. Something greater pulling through. All of it begins with you. Carried by a fearless love, right here, right now. Hearts awake, every breath a chance to take. Right here, right now. It's clear somehow. Forever starts right here, right now.
Now, based on legends, based on this drop, that's the only zone that I will consider a scalp long, is at the naked point of control, $63,000, 452. Let's see how price reacts there, because this could now be the big drop with volume. That could be nested 1-2s. Okay, this could be nested 1-2s, big drop with volume, and it could fall 5 here to the downside, bearish case scenario. Okay, to complete the C wave, even hitting the 2.618, or it's an extended fifth wave here to the downside. I'm not going to count the structure in detail here on the lower time frames, but interesting zone for a little scalp long, because high volume, that nested 1-2s is about to get invalidated. So if there's any chance for the nested 1-2s to stay valid, this is where price needs to bounce. It needs to get back above the 1.618. Yeah, not an easy long, I must say, not an easy long, right? Let me just put the music ever so slightly there in the background. Remember to, there we go. Remember to smash up that like button if you haven't done so already. I want to see what CBD is doing here. Let me take this out the way. There is some bullish CBD forming. Massive drop here on Bybit. People are short. Okay, now retail is shorting like crazy. Retail is destroying the shorts here at the moment. Oh, this could be a WXY. This could be a WXY. WX ABC and a Y. If price is going to turn around from here. Okay, you can also see these neon pink candles are massive volume candles, but you can see it in the volume as well. Neon pink, massive momentum here to the downside. Okay, I want to see a little bit of a neon yellow candle. I want to see that for a proper reversal. Okay. But this is what I wanted to see. It's just wipe all of those longs out of the market, because as price was falling, continuous bearish CBD, wipe the longs. Let's see. I do like this little zone here to the downside to eat up the liquidity below the lows. Just want to see from a liquidity perspective. There's a little bit of liquidity there. Okay, below the lows. But most of the liquidity is below this low. Okay, guys, I know that I have been talking about the bullish options. Okay, there's a bearish option. Remember, there's a bearish option. Okay, let me clean up the kitchen. Let me take the point of controls out the way. Let me just set an alarm here. I'll pay attention to when price gets to that zone. Lots of support in that zone from a price action perspective. Okay, also struggle to break out. Support can come back, do a RS flip. Right, so let's go back here onto the 15-minute time frame. Just do a little bit of a recap. Most bearish option. Wait, what did I do here? Most bearish option is 1 2 1 2 3 4 5 4 5. Okay, this structure to the upside can be counted as a three-wave structure. Remember, I've discussed bullish case scenarios, but there is that bearish case scenario where this is basically an A, a B, a C. It's done. It's a three-wave structure. 5-wave impulse, 3-wave corrective structure, dump to the downside. That could be your 1, 2, and it's now busy with a 3, 4, 5 correction continuation. We do have some high impact news coming out a little bit later, okay, which can create some nasty volatility. So I don't want to be on the wrong side of the market. I'm happy with the short that I'm in here on Bluffin at the moment. I am looking for a long entry. So if price wants to dump to the downside, happy days. Okay, why is it doing that? Let me just refresh this. Okay, so short printing at the moment, still happy with the short. I'm looking for longs. Okay, and I do see some sign of strength building up here at the moment, but I just need to highlight the bearish case scenario as well. Okay, 1 2 3 4 5 3-wave corrective structure, continuation to the downside, definitely a possibility. That was not an easy short, right? Didn't even hit the value area high. But got the rejection at the golden pocket. Okay, underbelly resistance basically got the rejection. Underbelly resistance, that's where price rejected. Okay, that was also not an easy short for me. As for those of you that's been following me for the last couple of hours, you know that I was looking for the short a little bit higher up. I was looking for that short. I did not want to short the 0.9 because it didn't meet my trading requirements. But now price got a nice little dump here to the downside. I do know that Andy highlighted this short inside of the community. So, great job, Andy. Great job. Price is currently getting a dump. If you did enter the short inside of the community, okay, I will already be, if it was me, I would be collecting profits here to the downside, leave a runner, okay, because it could get nasty to the downside. Now, you know, position for the short already, you could have a protected position. Free trade is always the best trade, okay, for me, because price could get aggressive. There is a three-wave structure here to the upside, which means that, you know, we've been talking about the diagonal possibility, 112, almost invalidated, almost, but still valid. Three-wave corrective structure, and now price is building the impulse to the downside for continuation. Bullish option is that this structure, this is why I've been discussing the bullish options as well, is that this is the low, this is a three-wave corrective structure. The low stays protected, price builds a, okay, 1, 2, 3, 4, 5 in a diagonal, which is not great. There's no overlap between 4 and 3. This is why I'm saying it's a cheeky little diagonal. Price forms a higher low and continues momentum back to the upside. Right, so I don't know which way price is going to go. For me, I need to look for longs at high confluence zone, which is the naked point of control. I want to see how price is going to react there, where I'll be looking for a long because I'm already positioned in the short. Remember to smash up that like button if you haven't done so already. If you're new to the channel, subscribe for future notifications. I'm still going to be here for a while. We're going to watch the Fed press conference together and go through some comments. Hi Devil, the $500 deposit for Access, does it have to be bank transfer or can it be on chain transfer in funds? It depends on which exchange you use. I think all of the exchanges cater for all of the options. You can do a bank transfer, you can transfer crypto. Okay, it's normal exchange. Okay, you need to use one of these links or the links that you got into from the instructions. And then based on the exchange, they'll have options on how you can deposit money into the exchange to trade with. It's your money to trade with. It's the normal process that you follow when you trade on exchanges. There just needs to be $500 in your exchange to trade with. And that will unlock the tools and give you access to the community. Okay, but you need to send the word access to my Telegram if you want access to the community. Once you got access to the community, you can then also follow the process on this tool to unlock all the features there. Or you can do it the other way around. You can unlock the features there and then follow the process to get access to the community. But you don't have to do $500 for both. You open up an account, you deposit $500, you can get access to both. Okay. It's not a $1,000 deposit on two separate exchanges. No, it's just one exchange. Okay, I did crypto deposit. There we go. Okay, I'm out of trading now, feeling somewhat hopeless. The amount of hours I've spent, never mind the money. Yeah, feeling really stupid at the moment. Sorry to hear that, man. It's trading is not easy. I know. I've been there. I have been where you are right now. E-buoyance, I have been where you are. Hopeless. Giving up. It's not working. It's a scam. This is what I thought. It's a scam. Every damn YouTuber that I'm following, they're lying to me. No one can make money in crypto or in trading. It doesn't work. And, well, I'm here today to tell you it does. It does work. You just need to put in the rules. You need to stick to your discipline. You need to have a trading plan. You need to backtest your strategy. You have to put in the work. If you're not going to put in the work, you're not going to follow your rules, you're going to struggle. I learned that the hard way. Okay. Because I also got into trading just for the sake of making money. Just, you know, I think we all get into the space just to make money. It's a quick buck. It's easy. And then you learn the hard lessons. Right. Is price going to front run over here? Two confirmations. I'm not sure if all the exchanges, maybe another, I just want to check out another exchange. Looks like they all made a higher low. Higher low. Higher low. Higher low. Higher low. Okay, so all of them made a higher low. I think a big problem for some traders as well when they start out is over trading. And there was an interesting question inside of the community this week where someone asked for some advice in terms of how to manage the temptation not to overtrade. Okay, the goal, remember guys, if you can master this mindset, the goal in trading should be, how do I win the trade? How do I master the trade? How do I perfect my trading strategy? If that is your mindset, money will follow. If your mindset is, how much money can I make? You're going to struggle. Because trading is not about how much money you can make. Trading is about mastering the strategy, the discipline. Then money follows as a result. But if money is the goal, you're going to struggle. So that's what I found in my trading career, and this is what I've heard many people teach from a successful trading perspective. If money is the goal, you're going to struggle. But if you can switch your mindset to say, every trade that I enter, I want to make it a winning trade based on my rules, my strategy, my discipline, following my plan to perfection, you'll see money will follow as a result. Right. What is a naked point of control? Please explain. I will go through that in a moment. Damn, I will be on a date during the press conference. I will lose the fireworks. Better weeks. What's better, weeks or 2-bit? That's a difficult one. Let me answer it this way. I have more money in 2-bit than I have more money in 2-bit than in weeks. More or less the same, but a little bit more money in 2-bit. I also have spot bags in 2-bit. I like weeks from a scalping perspective because I get very low trading fees because I own the native token. Not from an investment perspective, but so that I can qualify for the lowest trading fees. So I like weeks to scalp because I have low fees. 2-bit I like for bigger, slightly bigger trades, and I also have some spot bags on 2-bit. Not a lot, but I do have some spot bags on 2-bit. But I like them both. They just serve different purposes for me. Best trading group I've ever joined. My win rate has been the highest holding my short from Andy's call. Absolute amazing. Mikey, absolute amazing. Okay, guys, we do focus a lot on education inside of the community, but we do also share how we trade. And when I enter a trade, people take the trades. Okay, So although I say it's not a signals group, I do share when I enter trades and when I take profits and how I manage but I share it from an education perspective. You don't have to take any of the trades that I'm taking or that Andy is taking, for example. You don't have to. But people do, and the best traders inside of our community take the analysis from myself and Andy, they combine it with their analysis, and then they make a trading decision. Those are the most successful traders that I've seen in our community, especially when I have one-on-one discussions with some community members. So although I say there's no signals, people can still see when we enter trades because I share it. So what I do from a personal trading perspective, okay, what I do from a personal trading perspective, my wins for this month of July so far, my win rate, the trades that I've taken, I share that inside of the community when I'm not on YouTube, because I can't be on YouTube all the time. And Andy does the same. Okay, but I now and again there's a trade that I take that I don't share because I'm not in front of my PC. Maybe I'm traveling or I'm somewhere else, whatever the case might be, or for whatever reason, but it happens extremely seldom. I would say 1 out of 10 trades maybe I take by myself. Okay, but most 99.9% of my trades are shared inside of the community. Send me the word access. There's my Telegram if you want to join. Follow the instructions. Okay. Right, best trading group. Okay, most of our community members, I must say, guys, I myself and Andy see ourselves as extremely privileged when we read the feedback and the comments from the community members inside of the live streams, after the YouTube updates, the comments that we get after the fact. I really feel honored and privileged to have such a positive and inspired community, people that watch the live streams, people that are really passionate about doing this properly. Okay, I do feel sad for some of the other YouTube channels when I read through their comments, because it's the other way around. I'm not sure if you guys have noticed, you know, I'm not going to mention any names, but I read through a big channel's comments the other day and I was just like, wow, there is so much hate towards those influencers and very few positive comments. So I myself and Andy really feel privileged for the type of community that we have and people that watch these streams that are generally positive and give us good feedback and love what we do, because I think the beauty about our channels is we educate how we trade, but we're always looking at the bullish and the bearish case scenarios. And it's not necessarily the analysis that is phenomenal. It is how we execute our trades that is phenomenal. And that is what keeps us profitable. I can be wrong with my analysis many times, but when I enter a trade, I execute it with precision, following my rules, protecting my position, paying my fees so that I can get a trade like this from the highs. That trade was done inside of a live stream last week. This trade was executed inside of a live stream. For those of you that were in the live stream, you saw how focused I am on my risk management. It's almost like nothing else for me matters except my risk management. I don't care about how much money I'm going to make. You see, money is not the goal. I care about how much I'm going to lose. That's what I care about. And once I've got the losing component out of the way, then, okay, the money will follow as a result. And for me, that's the only way to consistently stay profitable. Devold, if I already have a Weeks account linked with other creators from some time ago, is it safe to create a new one and just, yeah, I think the best thing to do is that if you're not under my referral, is to create a new account. That's the best thing to do. Okay, if you are trading on BTCC, Kraken, you can request a transfer by sending me the word access to Telegram. So if you're trading on Kraken or BTCC, which will be shared with you once you send the word access, those referrals can be transferred, but not on Bluffin, not on Tubit, not on Weeks. You have to open up a separate account or a new account using one of these links. Okay. Right. Where is Bear Low Deviled? Where is Bear Low Deviled in your opinion? I think if price is going to take the low again, between $42,000 and $40,000, I think is going to be the low. I think it's a good bouncing zone. Okay, and there's something, I will discuss the point of controls before I forget. Someone asked me how to place point of controls, but there's something interesting on the higher time frame that I want to point out as well. Have you heard of the two crypto brokers that went broke? BitMEX and Bitmart. I think they forcibly closed positions at the end of September. How about that for a bottom formation around that? Oh, ouch. I feel stupid for saying no. No, I didn't know, but I did read something along the lines. I saw some people talking about it, but I didn't pay much attention to it because I'm not a fundamental trader. I'm a technical trader. So I see a level, I see a reaction, I enter a trade. Okay, I don't care whether fundamentals is whatever. Okay, so no, I'm not a fundamental trader. I basically hear what the community, I often go into the community and see what people are talking about inside of our chat section. And then that's sometimes where I pick up the interesting gossip from a fundamental perspective. Oh, did you guys see this and this and this and this happened? Okay, I'm not a Twitter fanatic and follow all the news and things like that. Like Mr. Rand from Crypto Banter, he's more of a fundamentalist. You know, he talks about fundamentals mostly. It's not who I am. My strength is technicals. Short or long? Shill coins and had bad at trading. That's because they try to shill coins or are just bad at trading. Yeah, I mean, there's been a lot of rug pulls in this crypto space. A lot of rug pulls. I've also seen my ass with rug pulls. Okay, but this is also why I trade on multiple accounts, guys. The reason I don't just have one link, the reason I have many links is because I trade on multiple exchanges, and it's part of my risk management strategy. Part of my risk management strategy is that what if, because you never know, the best exchange, like FTX, was considered a great exchange, and look what happened. At its peak, if you remember correctly, at its peak, FTX was considered a great exchange. Everyone was hyping it up, talking about it, and look at what happened. So what I'm trying to say is the reason I trade on multiple exchanges is I need backup. If any exchange goes bust, I want to be able to carry on trading. I cannot put all my eggs in one basket. Right. I'm in shorts. Joined Andy Deal's group and it was the best decision ever. The value they share is insane. Bruno, thank you so much, man. I'm happy that you guys are finding value inside of the community. When I do spend time in the community, okay, I really give it my best, guys. I really look for high quality. You know, there's always that thing of nothing's happening. People are looking for trades, for example. Okay, and those days are the difficult days. Like some days there is just nothing to trade. And I'm very happy to sit on my hands, but I see people get impatient. Like, hello, is there no trading opportunity? Is there no, there's no, sometimes there's no trading opportunity. That's just how it is, okay, sometimes. And then there are great days and weeks even where we're just roping in the trades, a short, a long, a short, a long. And then there are days where it becomes a little bit more difficult. I don't see anything that makes sense to me, okay? And that happens. That happens. Nothing wrong with that. But I'm glad you are enjoying it inside of the community, okay? And when times are quiet or sideways or confusing, I do like to upload educational content as well. Maybe do a private live stream where we talk about like point of controls, daily levels, okay, where people just ask me educational questions around trading strategies and so forth. So there is a lot more that's given to the community than here on YouTube. And that's why it's great to be part of the community. S&P 500 looks scary. Let's go look at the S&P 500 and then I'll get back to Bitcoin. I want to see what is cooking with the S&P 500. What is happening? Oh no, it's getting a nice little bouncy on the 15-minute. It's just been rampaging to the upside. 1, 2, 3, 4. 1, 2, 3, 4, 5. I think there's a chance for another high. Anyways, let's get here into the 4-hour time frame. I will not call that a big dump, by the way, guys. That's not massive. It's the pullback at the moment. It's just a pullback at the moment. It has lost the range. Yes, it does look like, I'm just looking at the, it does look like price is here. So after the fall, you get the fall. Okay. So there's still a chance for some bounces along the way. Okay, some bounces along the way before, but it does look like it's starting to cool over. It does look like it's starting to cool over, but it doesn't look like it's just going to do this, right? There's still a lot of support. I can see the clusters of support here to the upside. Yeah, I'm going to have to spend some time to do proper technical analysis here on the S&P 500. I've just run out of brain power. I've been here for 5 hours and 20 minutes. And price is still forming higher lows. Okay, price is still forming higher lows, but it's squeezing here into a wedge. Can you see it squeezing into a wedge? So I think there's still, it could still bounce a little bit, maybe lose it or break out. I don't think, I mean, anything is possible, but I don't think there's a high probability for price to capitulate just as yet. It's still forming higher lows. It's been squeezed into a wedge or a flag, whatever you want to call it. But I mean, guys, that's not a big drop, right? 0.56% drop on the S&P 500. Okay, I'm just trying to see the biggest movers here. AVAX 2.8%. Near 3. Oh, there's Brett, 9%. Biggest dropper here, I have Brett. Zilliqa, 12% drop. Now that is a big drop. Okay, but just comes from a big pump here as well. %52% to the upside. And now today, 11%, 12% drop here to the downside. Whoosh. Brutal, brutal. That is why I do not like to day trade altcoins. I mean, risk management on those things are absolutely insane to manage properly. Okay, so guys, the best area for me to look for longs is the naked point of control at $63,000, 452. If it doesn't hold, I will treat it as a scalp, because maybe it does this and it continues. I can make money with that move. I will treat it as a scalp, leave a runner. If it wants to continue back to the upside, then I have the runner. Okay, this for the moment can be counted as a three-wave structure: A, B, C, W, X, A, B, C, and a Y. Yes, so that can be your B wave. A, B, C, 1, 2, 3, 4, 5, highest in, 1, 2, 1, 2, and it's just building nested 1, 2s, and it's going to fall here to the downside. Volume selling pressure is increasing for the moment. So I just want to make sure that everyone understands there's always a bullish and a bearish case scenario. Okay, I am positioned in the short. Happy days, I will make more money to the downside, so I am looking actively for a long. Right, when I go onto the higher time frame, for if the low gets taken, and I will keep the community up to date as always. Okay, if I do enter that long that I'm waiting for, because I'm already in the short, we need to now figure out, well, where am I going to look for that long? Okay, and I had my boxes here somewhere as well. Do you guys remember when I did the live stream and I explained these high volume boxes? Well, look at where price got the bounce, inside of the box, at a high volume node. Next box, where I'll be looking for the long, $61,000, 61,700, give or take. Value area low, I think higher probability. I think if price is going to lose this box, I will treat that as a scalp, because I think there's a high chance to come back to the value area low, basically sweeping up the liquidity below all of these lows. Okay, there's a massive amount of liquidity below these lows, so if price is going to fall, this for me is the best swing long back to the upside. Big, I'm looking for a big move. Yes, there will be scalps along the way, but I'm talking about a nice long, because I'm already in the short. Value area low. Okay, there's another high volume node for the fake out that I will be keeping an eye on, but I will keep the community up to date. There's still a lot that needs to happen before price gets there. If price does get there, I will keep the community up to date if I do attempt a long or a short. And then if you want to be part of the community, send me the word access. There's my Telegram, and I'll send you the instructions on how you can join. Okay, that for me is still the best areas of support. Yeah, I mean, that value area high low is at the golden pocket as well. Okay, I actually want to take that level out the way. Right. Just want to see something here, from the high to the low to the high. 1-to-1 extension has not been tapped. 1.382, 1.618. Beautiful alignment, I must say. Beautiful alignment between these levels and support. But I will keep the community up to date if I do enter a fresh long. Okay, there's a chance. Like I said, guys, higher, 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 higher. Ever so slightly, there's higher highs. Higher lows, sorry. Higher high, higher high, higher high. Three-wave structure down. There's a chance for the bullish case scenario and price pops to the upside. Keep an eye on the trend. That could be a trading opportunity if the low does not get claimed. So depending on how price moves, I will update the community. If I do not take the long in this zone, I might attempt a long in that zone. I will just go in way lighter with my position. Basically targeting the highs where I'll be looking for the short. First area of confluence to the upside where I'll be looking for the short, very simple for me, is I want to see how price is going to react at the 0.382. So let me take this out the way, clean this up. When I take a fib from the high to the low of the structure, 0.382. Usually when price taps the first Fibonacci level for the first time, there's a nice little reaction. It could be a scalp that turns into a day trade, that turns into a swing trade. I don't know. Because I know that this can be an A. Three-wave structure in an A. It forms a B and it forms a C to the downside. Then price gets the bounce, so I can take advantage of that move. Right. Remember to smash up that like button if you do enjoy the education, the content, myself and Andy. From myself and Andy. Subscribe if you're new to the channel. And waiting patiently in 28 minutes, we're going to get a Fed interest rate decision. Okay, most bearish case scenario, you all know the deal, okay? If you don't know how the market moves, you don't need to know Elliott wave theory to see how the market moves. You just need to use common sense, okay? But once I show you this, you'll never be able to unsee it. And the community members know exactly what I'm about to say. When momentum is in a direction, you can see the momentum is to the downside. The movements up are always three-wave structures, which means it confirms momentum to the downside. You have a move down, guess what? Three-wave structure up. You have a move down, three-wave structure up. You have a move down, three-wave structure up. So you can see the aggressiveness is to the downside. The bounces are three-wave structures, which means as long as the structure remains a three-wave structure to the upside, the low gets smacked every single time. And guess what? Dump, three-wave structure. Dump, for the moment, if this remains a three-wave structure, which it can be, even there, okay, let me go zoom in a little bit here on the 4-hour time frame. I'm just trying to show you the danger of this structure, because this structure can be counted as a three-wave structure, which means that could be the high and price 1, 2, 1, 2, 3, 4, 5, 4, 5 here to the downside, smacking the lows again. Just want to highlight that. The bulls have a lot to prove over here. The bulls needs to create an impulse to the upside. Okay, some traders will tell you they don't care if they miss a 50% move to the upside to wait for confirmation before they take the long. So some technical traders will wait for a 5-wave move to the upside. They will basically wait for the 1, 2, 3, 4, 5. They will wait for that. So they will miss the entire move so that they can long the correction. That's where they long. But they will miss that entire move for confirmation. Because as long as it's a three-wave, the low gets taken. As long as it's a three-wave, the low gets taken. So there's still a lot for the bulls to prove over here. What makes this structure, however, interesting is that it's not as clear as these three-wave structures to the upside. There's a chance that this structure can morph still into a bullish structure. Okay, so on the higher time frame, what I wanted to highlight, okay, is if I look, and then I'll go through some comments again. We still have 24 minutes, okay? We'll pay attention. If you look at the previous bear cycles, I think, based on what I see from a technical perspective, price could be here somewhere. Okay, because you have the drop, the correction, the drop, the correction, the drop, the correction. but then the drops become smaller. You can see the drops become smaller, and then the bull market starts again. So if I had to guess from a fear and greed perspective, if I bring fear and greed into the picture as well, okay, you can see here's my fear and greed. When price made these lows, price went sideways for very long. Okay, well, when price made this low, fear and greed was at extreme fear. Price made an I think that was the FTX collapse, if I'm not mistaken, right? Yes, that was the FTX collapse. But fear and greed didn't really go down that much. You would expect it, fear and greed, to smack zero even, okay? So if I had to guess, I would say where Bitcoin is at the moment in this monstrosity, if I have to compare to what happened in the previous bear cycle, I would say maybe we are years somewhere. We are years. It's nearing the end. Based on what I see from a fear and greed perspective as well. One more drop here to the downside. So what could potentially happen over here is that you can see with this low, fear and greed was at extreme fear. It makes another low slightly higher. So it looks like selling pressure is drying up. So what could happen here? Price maybe goes sideways. Okay. It gets that final drop and then it recovers back to the upside. Anyways, just some interesting things I wanted to share. And that's just looking at what happened at previous bear cycles. Okay, because from an Elliott wave perspective, I have gone through here through the higher time frames as well, where I said this could be a 1, 2, 3, 4, 5, which can give you a wave A. This is your 3-wave structure and a wave B. That could be the end of the C. Minimum requirement for the C is to take the low of A, which it did. But now this structure needs to prove itself. This structure needs to form a 1, 2, 3, 4, 5. It needs to do that. Not this, not 3-wave structures. It's the correction that becomes interesting for the long. So the structure needs to prove itself. Another option is A, B, and a deeper C to the downside. Okay, 1, 2, 3, 4, 5. And then you form a 3-wave corrective structure. Bull market continues. So yes, there's a chance for this low to be in. Just doesn't look great. Is it valid? Yes. It just doesn't have the highest probability, but there is a chance. But the structure needs to prove itself. So guys, I'm not in the game of being right or wrong. Whether the bear market is going to continue, whether we're in the bull market, I'm not in that game. I'm in the game of the structure needs to show me that it wants to be bullish. And the structure hasn't proven itself yet. Okay, as long as I see momentum to the downside with 3 waves up, down, 3 waves up, down, 3 waves up, down. This can also form a 3-wave up, down again. The structure needs to prove itself. Once I see a 5-wave move to the upside, 1, 2, 3, 4, 5, I'm going to change my tune and say, guys, there's a chance that the bull market resumes. I'm waiting for correction so that I can long. So it's not about being right or wrong. It's about waiting for confirmation. So people that are speculating that the low is in, and well, I need confirmation. I need the market to show me that the low is in, and it hasn't showed me yet. That little structure that price has formed here can be counted in many ways from a bullish and bearish perspective. It's not a clear 5-wave impulsive structure up until the high. In fact, the structure up until the high is not a 5-wave structure. Up until this point, it looks more 3-wavy. It looks more 3-wavy up until this point. Okay, can't fit the diagonal. It's expanding. Very rare. Never preferred unless all other scenarios fail. But what makes the structure interesting is this. can be counted as an impulsive structure, which means that this can all be part of a corrective structure for this impulse. This is what makes this structure interesting, is that it has the potential to turn into a 5-wave structure, where all of the other bounces was diagonals. Bad. Not a great way to start a reversal. Do you guys remember all of the diagonals that is formed? Every time the low gets made, what happens? Price forms a diagonal. 1, 2, 3, 4, 5. Diagonal. Overlap between 4 and 3. Not a great way to reverse the price. Okay? Happened so many times. Price makes a low. What does it form? A diagonal. 1, 2, 3, 4, 5. Not a great way for a reversal. What had happened over here? Price formed, again, a diagonal. 1, 2, 3, 4, 5. Basically, a diagonal is there's overlap between the structures. It's not a clear impulse where wave 4 doesn't go into the territory of wave 1. So every time the low was made, it formed a diagonal. It formed a diagonal. Not time yet. Ended up being a 3-wave structure. Diagonal. But now, this is where things become interesting, and that's why I'm saying there is a potential for a larger bounce to the upside. Because I can see this as a potential impulse. That's not a diagonal. And this could be all part of a correction. Complex corrective structure, it's either a B, maybe A is over here, doesn't really matter, A, B, C, W, X, Y, but price forms a larger 3-wave structure and it can still bounce and take the highs. This structure has the potential to at least form a bigger 3-wave structure, and then once it gets here, if it can do that, now, wow, then the structure will start proving itself that it's morphing into a 5-wave structure, because remember, price moves in the direction of the 5-wave moves, the impulsive moves, and it corrects in 3-wave structures. So what you would, for the market to turn around, you want to see a 5-wave move up, and then you want to see these 3-wave structures in the opposite 3-wave continuation. 3-wave continuation, and that's how the bull market starts. Just like what happened over here with the previous bull cycle. You can see it clearly. Since the low, what did price do? 1, 2, 3, 4, 5. It formed a 5-wave structure, not a 3-wave structure. It corrected and it continued. Okay, you could also say, well, this is a 1, 2, 3, 4, 5. You could also say that, no, this is a 1, 2, 3, 4, 5. Took the high. But it doesn't matter how you count it. You can count 5-wave structures, not 3-wave structures. And this is the problem at the moment. The movements up are 3-wave structures. Anyways, I think I've harped on this point quite a lot. Okay. Let's go through some comments. I just wanted to share that from a technical perspective, education perspective. Do with it what you will. It's up to you. Andy Mind and Devil Pillar. Devil, to have a kind of personal question. The money which you make by referrals, is that comparable to what you make from trading? No. Not even close. Remember, guys, how the Bucky, what myself and Andy get from referrals is the trading fees that you pay regardless where you trade. So when you open up a trade and you pay $10 to open up that trade, myself and Andy get a percentage of, not even that whole fee, we get a percentage of that fee. So it's minute compared to what I make on my trading portfolio. It's very tiny, but at least it gives us extra income to pay for the development of the tool, to enhance it, to have a team to support us. It pays for everything else. Okay. Well, pays for some of that. Okay, but no, it's not as big as my trading accounts. Right, what would very much align with your Wyckoff accumulation as well? Fits nicely on the daily time frame. Very interesting. I'm not very familiar with Wyckoff patterns. I have seen people talk about them many times, and I guess it's not something that really interests me because I know Elliott wave theory, and I do see the similarities between Wyckoff and Elliott wave theory, for example. But it's always very interesting when people do share it. And I know Andy sometimes talk about a Wyckoff accumulation and redistribution, and but it's not something that I specialize in, and I don't want to talk about something pretending that I know what it is about if I don't. Okay, I just want to be as authentic as possible. I've seen it, I've heard about it, I've seen people talk about it, but I don't specialize in it. And I obviously don't trade it. Okay, I'm a day trader. I trade levels, swing failure patterns, Elliott wave theory, range highs, range lows, D-line strategy. That's what I trade. So you see the 0.786 of this whole move. I'm not sure if you're talking about the higher time frame analysis that I've just done. Okay, someone asked me, where do I see the potential low? Well, if the structure doesn't prove itself to be a 5-wave structure, or let me put it the other way, if price forms a 5-wave structure here to the upside, I'm going to change my tune and say there's a high chance the low is in. It's done. Okay, whether this is an ABC or whether this is a W, X, ABC and a Y wave, there's a chance that that low could be in, but I have to see the 5-wave move prove itself first. If that doesn't happen, the bear market low if price does not take the high, just want to make sure that I have my settings correct. You see, I would say in this zone, and I know it's a big zone, it's between 46 and 39, but it could be as low as $52,000. You see, what I like is this zone aligns with that price action. That's what I like. I want to see whether if there's price action to support a bounce, because there's volume in that move. So there's demand. There's demand in that zone. Just like there's demand in this zone where price is currently getting the bounces in this zone. So if it loses this zone, the next zone is this zone, which is between $46,000 and $39,000. There is another very interesting scenario. Guys, I just need to highlight this scenario as well. Let me see if I can find it. Not that one. Now this would be a very interesting scenario. So imagine for a moment that price just goes sideways and then it falls. End of the year, you get the final drop. End of the year, you get the final drop to the downside. But for the rest of the year, price just goes sideways. And this is a scenario that I'm keeping an eye on as well. In fact, I really like this scenario because it gives price time to finish after the 0.382. From the high to where price is now, it's not even 38% of the entire bull market to the upside. So you can see there's a little bit of a timing issue. Okay, if I go to the daily time frame, and this is why I like this scenario from a timing perspective. From the, where's the brush now? From the low to the high, this move to where price is right now is not at the minimum requirement for a correction for an impulse. It is fine if it just at least gets a little bit closer. It just gets a little bit closer to the line. Okay, but it's very far away from the minimum requirement. So in an impulse, most often, more than 75% of the time, the correction finishes after the 0.382. And this is why this scenario for me is so interesting, is if I look at where price is now, and this is why I think price could still get a bounce here to the upside. Imagine this had to play out. Price forms a three-wave structure up, bearish, but it forms a three-wave structure down, forms a higher low, does not take out the, and then another three-wave up, lower high, and then all hell breaks loose and it gets the final dump to the downside in a C wave. Very interesting scenario and very valid. Very valid. But then, yeah, this structure, I know some of the eliticians are going to tell me, dear, well, that structure has to be a three-wave structure. It looks like an impulsive structure. You can count this structure as an ABC. It's valid. It's not pretty, but it's valid. ABC, ABC, WXY, doesn't matter, three-way structures, and then it dumps to the downside. Still very interesting scenario. So you could imagine, what if price just goes sideways for the rest of the year? Doesn't go lower. It doesn't take the high, it doesn't take the low, it just chops sideways. Until the end of the year, you get the final drop to the downside. A very valid structure inside of Elliott wave theory, because after a 1, 2, 3, 4, 5 and an A wave, B waves love triangles. They do love triangles. I've seen many triangles inside of B waves. And this could be the first wave inside of the triangle. So it is very early to talk about this triangle. I know it's still very early, okay? But it is a scenario that could develop. Right, legends. 15 minutes left until the Fed press conference. I think I'm going to take another 5-minute break quickly. Just something that I need to go and do quick. And then I will see you all in 5 minutes again. Let me just get back here onto the smaller time frames. What is cooking? Came so close, and now there's so much overlap. Four-year cycle, believers, there is still 65 days to get to 39. Starting to make a move. Okay, it's in 15 minutes from now. So I'm going to take a break just for 5 minutes. I'll be back before the big news comes out. Okay, I just need a quick break, a little bit of a bathroom break and so forth. And then I will be back here with everyone. And thanks for hanging out with me. I will see you all in a couple of minutes. There we go. We'll be back shortly. Let's do that 5 minutes. Back in 5 minutes. Let's do that. Right. We'll be back in 5 minutes, legends. I'm expecting some volatility, but let me go take a quick break and then I will see you all in 5 minutes.
frequencies locked. Ignition in 3, 2, 1. Let's go.
Ooh, nice little pump here from Bitcoin. It is 8 minutes before the Fed interest rate decision. Will it come in better than expected or lower? Expect some volatility. This is typically a zone where I like to stay out of the markets. If you're not already positioned in a trade, I don't want to trade the volatility, okay? It's something that I often tell the community as well, is that I tend to stay out of the market when I know that there's massive volatility, because it could sweep liquidity on both sides. And then after the market has cooled down and absorbed the news, then the real move happens. So I think it will just be interesting to see what plays out over here, but I'm not particularly interested to trade this volatility, okay, until I see something clear. And obviously I will keep the community up to date tomorrow, if not me, Andy, or both of us, in terms of those next trading setups from a day trading perspective. What I want to do is just get back onto this page so that I can see what the decision is gonna be. Previous, I'm not sure if you guys can see that. Let me just do this. Okay. Previous 3.75 consensus, 3.75 actual still needs to be confirmed. So will it come in better than expected? Obviously, there's going to be a nice little pump if it comes in better than expected. There is that little bit of a sentiment that because the inflation data came in better than expected, perhaps interest rates will remain. So it's going to be a nothing burger. And only time will tell. No one knows, right? Except like someone mentioned here in the comments, maybe there's some insider traders, maybe they know. I don't know. I don't care. I just execute my trading strategies. So let's see what unfolds here. What I also want to do is I will do that after the interest rate decision gets announced. Just want to have a look at streaming the Fed conference. Now I will look that up when the time comes. I want to see if I do have. I don't have that anymore. So almost time. 6 more minutes, expecting a little bit of volatility. Price is getting the push here to the upside. Still the chance for the most bullish case scenario is still intact. The most bullish case scenario, 1, 2, 1, 2 did not take the low. It is still valid for a wave 2 over here. Okay, 1, 2. And price pops in a third wave here to the upside. Still very, very valid. Not great because of how deep that retracement went, but it is valid. Okay. Bearish case scenario, maybe a 1, 2, 1, 2 does not take out the high and it 3, 4, 5, 4, 5 to the downside. So it literally, what I've seen with these high impact news events, especially with the interest rate decision, it's like the market positions itself perfectly that it can go either way, and there's like a 50% chance, because this could also be your A, B, C done, and it's now forming impulses to the downside. Okay, I must say, not the greatest looking impulse to the downside. This one being larger than that one, but it's not an invalidation. 1, 2, 1, 2, 3, 4, 5, 4, 5 takes the low. Okay, the initial move here to the downside is a 5-wave structure. That is something that has to be considered, that this move is a 1, 2, 3, 4, 5-wave structure. This for the moment is a 3-wave corrective structure, which means, okay, that price could fall back to the downside. 1, 2, 3, A, B, C. Doesn't really matter if this is a 3 or a C. This can get aggressive to the downside to the next area of support at $61,000. If price moves to the upside, 3 minutes left. Let's see if price will successfully break this trend. I'm going to have to do a serious cleanup on my folders after this live stream, because I have smacked so much stuff in here. Okay, I need to go back to the regular scale. There we go. Right, you have a trend. Which could be a rejection point. Because this could be a sorry, let me just redo this. This could be a 3-wave structure in A. It goes up in a B and it rejects in a C. So that to me is an interesting shorting zone. I would prefer the 0.382 to get smacked. That's basically where I'm looking for my short. At the $67,000, 340. Obviously, I will keep the community up to date. If I do enter a new short, if I get stopped out of the short that I'm currently in, and I do enter a new short, I will let the community know. If I enter a new long, I will let the community know, because I do share what I do from a personal trading perspective inside of the community. If you want to be part of the community, send me the word access to my Telegram and I'll send you the instructions on how you can join. Now, we need to see what is going to cook over here. One more minute. Two minutes left, 1 minute left. Yeah, exactly. If you get the data before I see it, because maybe this page takes a while before it updates, please let me know in the comment section. I am keeping an eye on the comment section over here, but we must probably going to see what happens over here. Okay, whether this is bullish or bearish. I mean, we can see on the price action if this is going to be a bullish pump or bullish news. Bullish. Price took the high, invalidating a 112. Did not take that high. Let me just refresh this. Is the news out yet? It doesn't show on my side yet. Maybe you guys know. Coinbase just had a nasty fast week. Volume is increasing to the upside for now. 3.75. Okay, so it's a nothing burger. Is it a nothing burger? Let me, because I don't know if this site is just taking a little bit of a time, a little bit of a while. Yeah, nothing burger, 3.75. This site is just taking a little bit of a while to update, I suppose. 3.75. Market got what it wanted and what it expected. Consensus was 3.75. The market got 3.75. So it's not bullish, it's not bearish, very neutral indeed. But I would say it's a little bit more bullish than bearish actually at the moment, because no increase is better than an increase in the interest rate. No change, we dump. So what is the structure like when multi want to invalidate it? So there is multi 1-2 to the downside. Is that what you mean? Not sure which structure you're referring to, because this could still be ABC W, that could be an X, and it goes up for a B C in a Y, and then it falls down as long as price does not take these highs or that high. So as long as this high is not taken, because I'm looking at the bigger structure, okay, I'm looking at this structure, this could still be a 1 2 1 2 3 4 5 4 5, and it gets really nasty to the downside. Unfortunately, the bulls needs to claim this high. If this high is claimed, then it increases the probability for the range to continue at a bare minimum, or for the high to be claimed again. Right, remember to smash up that like button for the content. Yes, downside 1212, we hit top. No rate change. Press conference with Walsh in 29 minutes. Okay, let me see how many likes do we have. And then I'm gonna just do a quick poll. Do you just want to do a quick poll. Okay, let me know in the comments if you do want me to stream the Fed conference here on this live stream, or if you're not interested. Okay, then I'll just end the stream. If you are interested, I'll stay for a little bit more and we can watch the Fed conference together, because I'm going to watch it anyways. I just, out of interest, I do like to watch it just to hear what they are up to, what they're saying, whether it's dovish, whether it's hawkish. Got stopped out, shorting opportunities. Fed held rates, lower structure. Okay, let me know in the comments. Okay, you guys want me to stay for a little bit longer. Okay, and do the stream here. I not taken anywhere. Everywhere. I not taken everywhere. Okay, there's still a lot of volatility that can happen here, legends, because most bullish case scenario, remember, is 1 2 1 2, and this is busy with a third wave to the upside. You want the highs to be claimed. What I was looking for is, once this move happens, which is already the highest amount of volume, and it hasn't even started, I want to see the highs chopped on lower volume. where I will be looking for the short, and I will share that inside of the community if I'm not sleeping. Obviously, if I'm sleeping, I can't share anything, okay? Right, and it's basically the same thing here. Do you guys remember the stream from Andy yesterday? That's what I'm looking for. On the one minute time frame, if I look at this structure, this is what I'm waiting for. Okay, if price wants to go and smack that high, look at this. 1, 2, 1, 2, 3, 4, 5, 4, 5. Volume decreases. Highest amount of volume is in that move. I need that for me to short. That's the same thing that I'm looking at. Okay, I don't have to trade every single opportunity. I trade the structures that make sense to me. I trade high probability trades for bigger moves. Okay, so this structure needs to prove itself to me. I need to see 1, 2, 1, 2, 3, exactly like I've showed you on the 1 minute time frame. Okay, volume is for now increasing, but it needs to push higher. Then I want to see the chop to the upside so I can short. Because it's either going to be a correction, I can make money with that move, and then it can continue if it wants to. Now, I will keep the community up to date if I see anything change inside of this structure. Okay, I just want to see if I'm not maybe missing anything else. If I'm started bull moon. Yes, we do have the bull moon that is printed, so which means that there's some buying pressure overall from a full moon perspective. FOMC started bull moon. Yes, gives us confidence. Yes, it gives us confidence. Let's watch together Legends possible double bottom on low time frame. Voted yes, so the stream continues. What is the results of the poll? 86% of people do want me to stay. 85%. Some people are not going to watch it. So for the 85% of you, you're welcome to stay. I will broadcast it live here from my live stream so we can watch it together. I'm not going to say much. I'm literally just going to put it onto YouTube, put the chart and stuff next to it. I'll sort it out now as the time gets closer. And then we can watch it together because I was going to watch it anyways. Okay. Right, remember guys, I always talk about the community this, the community that, the community, you know, I sometimes feel like I'm community obsessed, okay, but I do share, if I'm not on YouTube, I do share what I do inside of the community. I share analysis, Andy shares analysis. If I do enter a trade, I let the community know. I answer questions, I do private live streams, and if you want to be part of the community, send me the word access to my Telegram and I'll send you the instructions on how to join, okay. Oh, it did update, by the way. Just took a little bit longer. 3.75 is the consensus, as you guys can see over there. So a nothing burger, basically. Now I can get back here to CVD. I just want to see what... Oof. Almost took the high. Bearish CVD forming. Lots of longs entering with this momentum here to the upside. Okay, ABC, this is either ABC here to the upside or 1, 2, 1, 2, 3, 4, 5, 4, 5. It needs to still chop a little bit here to the upside on the 5-minute time frame. Okay, the volatility is obviously going to start again as soon as the press conference gets underway. What I do want to do is I want to go and just quickly search for the Fed press conference here on YouTube. Okay, let me go and search for that quick. I want to just get this ready. Let's just do this so you guys can see what's happening. Do, 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 do. Just want to see something here. Okay, that is coming through. Now, what I need to do here is a little bit of creative stuff. Make myself a little bit smaller. Let's do that. Let's just set this up. And pull this in here. Let's do that. All right. Let's do this live. Okay, you guys can hear that. I'm sure you can hear that. Whoops. Not like that. Right, just getting that ready. I suppose I can just mute this for now. We don't need that right now. And I think that's about it. These long streams are total bangers. Thanks and cheers. Absolute pleasure, man. Use the FED YouTube channel. This is the FED YouTube channel. Federal Reserve. This is the Federal Reserve channel. Okay, pump before, conference, dump after. The music is a bit loud. Coinbase week down. Okay, I have sorted out the music and everything else. Wanna watch Devold instead. ETH good for short, triple top, and anchored VWAP. Let's see. I haven't checked the anchored VWAP actually. Almost there. Not there yet. Well, on the exchange that I'm watching here at the moment. Now there's resistance here, okay, from a price action perspective. If price is going to move to the upside, what I like to do is the following. And then I'll keep an eye on the levels to the upside for rejection. Because I realize that this can still form a larger three-wave structure, okay? Can still reject at any of these levels. Bullish case scenario, you want price to at least smack the 1.618. Bearish scenario is it rejects a little bit lower. But I can watch these levels for potential scalp or SFPs, because I'm aware that this could be a W, a X, and a Y. A, B, C, and Y. Or this could be an A, B, C. Doesn't matter. Three-wave structure. But it has to prove itself. It needs to shoot up and 4 5s based on this. It needs to 4 5. We'll be looking for the short. Obviously, I will keep the community up to date as always. For the community members, I will keep you up to date. Okay, if I do enter a fresh trade, if I do get stopped out of my short, I will keep you up to date if I do enter a fresh trade. And if you want to join the community, the link is down in the description. Send me the word access to my Telegram and I'll send you the instructions on how you can join. Let's go, legends, Kinkai. Whoops. Suppose I can just, doesn't really matter. I'm sure you can all see that. Okay, as long as we can see the price action, maybe I should go a little bit wild and stuff around here on the 5-minute time frame so we can see what is cooking. I also want to have my levels ready. Daily levels, point of controls. Okay. That was basically a back test of that daily level, but it's no longer valid. So I'll take that out. Dump, pump. Right, so this is going to start in about 12 minutes from now. Devil, today's my last live stream for a while, so I'm staying here with you until the end. Much love. Aw, man. Thanks for staying though, Maria. Thanks for staying. Okay. Deleting the pump. The news is about to finish, I guess. 13 minutes left for wash. Let's go, legends. 1.382 in confluence with the daily. 1.382 in con. Are you looking at this one over here? This one. Yeah. I like it when I see some confluence. Okay. Remember what I said, legends. I do not trade the news fundamentals because it can get very wiki to the upside and to the downside. Basically, you know, the market loves to grab liquidity on both sides, especially on high impact days like today. I tend to stay out of the market if I'm not already positioned. I am positioned in a short, so if it dumps, I'll make money from the short. And depending on what structure unfolds over here, I will look for a longing opportunity depending on what structure I see, and I will share that inside of the community. Okay. I'm going on a long expedition with the Nat Geo crew tomorrow. That is absolutely amazing. You must enjoy. We're going to miss you, but I'm sure you're going to come back recharged and refreshed and ready for this again, because I know, Maria, Okay, you're making some you've made some good trades over the last couple of months, okay, from what I've seen inside of the money shots inside of our community. Try money control live stream, play that. Try money control. Well, there's still a lot of time. Guys, I think this is the right link. Okay, this is the one I usually watch. I'm not sure if there's a better site that I need to explore. Let me go check inside of the community. If you guys have a better place where I need to watch this, please share it inside of the chat section inside of the community. I'll go check it out, or just let me know it's fine. Okay, maybe there's a better site where I can go and watch this. Okay, I'm inside of the community. If there's a link that you know that is better on YouTube that we can watch, please share it inside of the community, because I know you can't share links here on YouTube unless you're a moderator. Okay, the site is fine, perfect. Okay, for Fed news. I won't be trading for a few weeks. I'm so grateful for this past few months. It's been an awesome ride. Have yourselves an amazing time, Maria. Okay, and we can't wait to welcome you back. Switch off, like you say, you know, and myself and Andy always preach. Switch off, reset your brain, forget about the charts, delete trading view from your phone. Okay, come back refreshed. Guys, I will put this louder as soon as it goes live. There's still 8 minutes left. And then we can watch the volatility together. What is this? Money control. Is this the one?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank and an economics profession,
No, this is the
what we
old
spend
stream.
most
It's
of our
not
time
live yet.
doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and
I'm just going to stick to this one. Well, it's a nice recap. Right. I'm just going to stick to this one, guys. That other one looks like it's just a recap of what was said the last time. Okay, it starts in 5 minutes, so it doesn't make sense that they've already started. They usually start on time, so I'm just going to stick to this one over here. Yes, that one. No, that's the one I had. Four minutes left. Yes, there is 4 minutes left. And then we can watch this together. Remember, legends, I'm just going to watch this in silence, hear what they have to say, maybe make a comment or two. But this is usually what I do where there's high impact news. I think this is the only fundamentals that I do watch. I find it interesting just to hear what they are saying and how it moves the price. I'm not particularly interested to trade the volatility on high impact news like now, unless I'm already positioned in a trade. If I do enter a fresh trade, I will let the community know, either myself or Andy. And if you want to be part of the community, it's the send me the word access to my Telegram. It's the first link down in the description, and I'll send you the instructions on how you can join. Three minutes. Point of control SFP. I just want to see what CVD is doing. There was bullish CVD between those two pivots, but it's very neutral where you can see the market is indecisive at the moment. No bullish, no bearish CVD at the moment. Thanks, Mr. A Trader, for sharing that link. All right, it's about to start. Not a lot of people watching. I thought there would be more people joining on their side. Maybe everyone's still waiting for the last minute. Here we go.
Good day. My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
Thank you for taking our questions, Mr. Chairman. Sure. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message. Letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so...
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers like market pros can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor markets solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much. Not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Colby.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy if inflation continues to be elevated through the forecast period? Interest rates could well be part of that solution, but I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made to the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you've characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Timmeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us, they weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast, we don't want your dot, we just want your reaction function, part of me hears what we really want is your forecast, and what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all of that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is it's going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. Thank you. It's coming. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more, but to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Mike McKee.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it, and it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it, but I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced, and over the coming months I expect it to be advanced much more significantly. If I were to steal a follow-up question, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses. impatience. Deliver it already. This is not an excuse, this is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job, we will deliver, we are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys, but if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi there, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that, so we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
All right. I think it's done. There we go. Right, legends. Thank you so much for staying with me for so long. Let me know in the comments who has been here since the start of this live stream. Let me know by responding with 1. If you've been here since the start, reply with 1. If you haven't, you don't have to respond. We can just respond with 2 if you joined a little bit late or have been watching parts of this live stream. I just want to see who are the... Oh my word. Oh. Right. Let me just fix myself up over here. Let me make myself a little bit bigger. There we go. Put myself back in action over here. Me. 1. We have all the 1s. Okay. And we have a couple of 2s. Me. Well done, legends. Oh my word. It's an overwhelming response of 111s just everywhere. Holy crap, guys. I think this is officially the longest live stream that I've done on this channel so far. 7 hours, 20 minutes. For those of you that has been on this live stream with me for so damn long, congratulations. I'm not sure if I'll always be able to push the live streams for so long. It does take a lot of commitment and brain power to hold the space and do technical analysis. I thank you so much for joining the live stream. Remember, tomorrow is my day inside of the community. I will be providing some analysis. If I do enter a trade, I will keep the community up to date. I will do maybe a video update or a short live stream during the evening. I'll see what time. Okay, maybe like 5 p.m. Central European time tomorrow. But I will be spending most of my time inside of the community. Remember to smash up the like button. I want to see what CVD is doing over here. It actually looks... Let's see. Right, it actually looks bullish. Local bearish CVD. There's some local bearish CVD. The target is the low, but there's also bullish CVD building up, which is more local. So bullish CVD might win the game in the short term over here. Remember to smash up the like button. If you would like to be part of the community, send me the word access to my Telegram. I'll send you the instructions on how you can join. If you'd like access to the stool, okay, here's the link down in the description. You need to sign up with one of the affiliate links. Make a minimum deposit of $500, which is your money to trade with, and you'll get access to this amazing indicator that I use on a daily basis. And right, legends, that is basically the technical analysis for now. I need the market to absorb the news for the moment. As per the analysis, okay, most bearish case scenario, just want to do a little bit of a recap over here. Most bearish case scenario is price is forming a 1 2 1 2 and it falls to the downside 3 4 5 4 4 5. Okay, where I'll be looking for longs at areas of support. There's still a lot of levels to the downside. I'll keep the community up to date. Bullish case scenario is that price has formed a little sneaky little contracting diagonal 1 2 3 4 5. Okay, A B C gets the bounce back to the upside. Still keeping an eye on this naked point of control at $63,552. Price is just not in a zone at the moment where I'm interested in a trade. Okay, I'm positioned in the short. I'm looking for a long. I'll keep the community up to date. Thank you so much for joining the live stream. Remember to smash up that like button. Thank you so much for the diehard fans. And remember to leave a comment after the stream. It really helps the YouTube algorithm. And I will see you, the community members, tomorrow. Have a great evening. Until the next one. Cheers for now.